Are you preparing for the upcoming CASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive CASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0719451155. Focus Online College, your trusted partner in passing CASNEB examinations. Are you preparing for the upcoming CASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive CASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0719451155. Focus Online College, your trusted partner in passing CASNEB examinations. Are you preparing for the upcoming CASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive CASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0719451155. Focus Online College, your trusted partner in passing CASNEB examinations. Are you preparing for the upcoming CASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive CASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0719451155. Focus Online College, your trusted partner in passing KASNEB examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0719451155. Focus Online College, your trusted partner in KASNEB examination. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous. CPA, ATD, CS, 2,500 Kenyan shillings per unit. BDA, 1,000 Kenyan shillings. Take advantage and secure your place today. Call or WhatsApp 719155. Focus, your trusted partner in KASNEB examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos and shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 9455. Focus Online College, your trusted partner in passing KASNEB examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass. College invites you to join our intensive KASNEB block revision classes, running from the 23rd 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0719455. Focus Online College, your trusted KASNEB examination. Are you preparing for the upcoming sessions? Now is the perfect time to revise smarter, understanding, and pass with confidence. Focus Online College invites intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program to help you revise key examinable topics, strengthen your concepts and understanding, and build need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 500 Kenyan shillings. Block access to previous class videos. CPA, ATD, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take opportunity and secure your place today. Call or WhatsApp 9455. Focus, your trusted KASNEB examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 945155. In College, your trusted partner of examination. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or 0719155. Focus Online trusted partner in passing KASNEB examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join.
Please confirm. 1st July 2024. Capital account. But before we do that, if you go back to the trial balance which you're given, can we go back to the trial balance? The first item in that trial balance which you're given is the profit for the year. Now, let me ask here, what happens to the profit of the partnership? If, for example, we are partners in a partnership business and our business has reported a profit, what happens to that profit which is reported by a partnership business? Who can tell us? What happens to the profit which is reported by partnership business? Where does that profit go? Where does that profit go? Is it retained as a reserve? Is it supposed to be shared? Yes, automatically, once a interest in this particular subsidiary, this company therefore is called the investor, whereas this one is called what? Is called the investee. In this case, we say that the parent company must pay for the interest, must pay for the shares acquired in who? In the subsidiary. And in this case, we say that amount of or the purchase consideration paid by the parent can actually take 4 forms. In other terms, we talked about 4 forms of the purchase consideration of the purchase consideration. Number 1, we said we have the cash consideration. And we say that this is a consideration paid in cash and on the date of acquisition. We say that this one does not have any special treatment when it comes to the computation of goodwill. Number 2, we talked about the deferred consideration. And we say that this is a consideration to be paid by the parent company in the future. And when computing the goodwill, we say that such a consideration must be discounted to its present value using the parent company cost of capital. So number 3, we talked about the contingent consideration. Equally, this is a consideration to be paid by the parent company in the future upon certain conditions being met. For example, in this case, the parent company can acquire a subsidiary, and basically the parent company promises to pay an additional consideration in the future if maybe the profit reported by the subsidiary exceed a certain amount. So that is a contingent consideration. And number 4, we have the share exchange consideration. So these are consideration which is paid by the parent company by issuing its own share. So what the candidates were required to do here is just to identify without much, without I think explanation, just to state the 4 forms of purchase consideration. And basically by doing such, the matter located there were 4. So let's go to part B of the question. So the question reads, on 1st of October 2024, TUI Limited acquired 80% of the ordinary shares of Swara Limited at a cost of 2,570,000. On the same date, it also acquired 50% of Swara Limited, 10% roll notes at par value. And then you're told the summarized financial statement of both companies were as follows. So first of all, we have the statement of profit or loss for the year which ended 30th of June 2025. We have the statement of financial position there for TUI for Swara, and then we have additional information. So additional information about all the way to note number 7. And basically, if you check on now those particular notes, note 1, note 2, note 3, note 4, note 5, note 6, you'll be able to see that all those particular notes require knowledge of what we discussed in our 2 previous classes. You, for example, be able to see note number 1 is about revaluation of asset by the subsidiary, something we refer to as a fair value exercise or a fair value adjustment. If you take, for example, note number 2, this one is on intra-group trading and also the concept of unrealized profit. If, for example, you check on note number 3, is about amount of intercompany debt. If you check on note number 4, is about goodwill. If you check on note number 5, is about, I think, something to do with the pre-acquisition retained earnings, and so on. So therefore, whatever you discussed in our previous classes, in our 2 previous classes, we said that knowledge is very, very important. Now, what are we required to do? We are required to prepare the consolidated statement of profit or loss for the year which ended 30th of June 2025, 8 marks. And then we are also required to prepare the consolidated statement of financial position. Now, anytime you come across a question for group account, and this is also something I mentioned in our previous classes, that the first thing you need to do always is to come up with a group structure. Then once you come up with a group structure, even before proceeding to prepare what is required, you basically need to consider or to determine which consolidation adjustments are required. Because we said, for example, to prepare what is required here, no much challenge. You just need to take the revenue of Chui and basically you add that of Swara. For the assets and liabilities, you take those of Chui, you add those of Swara. But we said there's a number of consolidation adjustments which we need to make after adding those assets, those liabilities, the revenue, and what expenses. So once we come up with a group structure, we need to do a number of workings and we determine the various adjustments which we are going to make to those items of asset, liabilities, revenue, and expenses. But the first thing we need to do here is basically to come up with a group structure. To come up with a group structure. So we have information about this in paragraph 1. And remember, in this case, we said when coming up with a group structure, we basically determine the share, the ordinary shares, which the parent company acquired in who, or which the investor company acquired in the investee. So in this case, we may be told that this company, for example, acquired debentures, this company acquired preference shares. In coming up with a group structure, we use the percentage of ordinary shares, not anything else. The percentage shares acquired by the investor company in who? In the investee. So in paragraph 1, we told on 1st of October 2024, Chui Limited acquired 80% of the ordinary shares of Swara at a cost of 2,570,000. That is the information which is used in coming up with a group structure, the percentage ordinary shares which were acquired. So we are told the company which is called Chui Limited, this company acquired 80% of the ordinary shares issued by the company which is called what? Swara Limited. And we also given the date there, 1st of October 2024. Remember this 1st of October 2024, this one we refer to it as the date of acquisition. And actually that one is abbreviated as what? DOR. So therefore, from this group structure, we can be able to conclude and we say that this is the parent company, whereas that is the subsidiary. So the company which is required to prepare the group account is that one. Now, even before you proceed to anything else, it is always also important to identify two dates. The date of acquisition, which we already have. This is the date of acquisition, 1st of October 2024. And also you need to identify another date, which is called the date of consolidation. The date of consolidation is the date you are required to prepare the group account. Where do you get that date of consolidation? You get it from the requirement. Can you go to the requirement? We check when we are required to prepare the group account. We are required to prepare the consolidated financial statement on the 30th of June 2025. So 2025. Why is it important for us to have those two dates? It's basically to identify whether this particular subsidiary, was it acquired during the current year or was it acquired before the start of the current year? So basically you can see this year ended on that year of June. Automatically the next year here will start on 1st of July. So therefore you can say this year started on 1st of July 2024. Is that the case? Yes. 1st of July 2024. That is when the year started. Now we need to check this year when our subsidiary was acquired. Is it within the current year or is it before the start of the current year? You can see, take into account the year started on this date. That is the 1st of July 2024. You can see that this date here falls within the current year. Falls within the current what? Year. It basically means that this subsidiary was acquired during the current year. How many months to the end of the year? So how many months do we have from this date to that date? How many months do we have between those two dates? How many months do we have between those two dates? How many months do we have between those two dates? How many months do we have between those two dates? I'm told 8. Then make sure you count very well. So tuko na October, tuko na November, tuko na December of 2024. Kwa hivyo 2024 tuko na miezi ngapi? 3. But ukienda 2025, we have 6 months. So here we have 9 months. Make sure your computation is very, very much accurate, because if you get that long, then you are likely to get the entire income statement long. So meaning that this particular subsidiary here, that is Swara, it was basically acquired 9 months to the end of the year. Why is it important for us to determine that? Now we said when it comes to the preparation of the income statement, when preparing the consolidated income statement, it's very, very important to identify whether a subsidiary was acquired during the current year. If a subsidiary was acquired during the current year, then we say when taking into account the revenue and expenses of this subsidiary, the revenue and expenses, we will only take that for 9 months. In other terms, we apportion the revenue and expenses of this subsidiary on type what basis. That does not apply to the parent. That one will only apply to the subsidiary. But if the subsidiary was acquired before the start of the current financial year, then what you do, you take the revenue and expenses for the whole year. So that's why it is important for you to determine this, that the subsidiary was acquired 9 months to the end of the year. It basically means that when preparing the consolidated income statement, the revenue and expenses, the sales and expenses for SWARA, we will not take that for the whole year. We will take that for 9 months. We apportion that on time basis. Because we're given revenue and expenses for the whole year, we multiply that with 9 all over 12. So that is very, very important. Then, still in paragraph number 1, we are given the cost of investment, the amount which was paid, which is 2,570,000. This one will be used in the computation of goodwill. And yes, in computation of goodwill, still in paragraph 1, sentence 2, we are told, on the same date, it also acquired 50% of SWARA Limited, 10% raw notes at par value. So basically, never make a mistake using this to determine the capital structure. I've said when coming up with the capital structure, you use the shares acquired, the ordinary shares which are acquired. So this company we are told is also acquired. It's also acquired 10% road stock. That is another investment. So this company invested by acquiring shares. It also invested in acquiring the own notes of this company. I'll be able to explain how we are going to account for that. But when coming up with the group structure, basically we use the percentage of the ordinary shares which were acquired. I think then from there, can we go to the additional information? In the additional information number 1, what are we told? We are told that the fair value of SWARA Limited, and now what you need to remember very fast is TUI is the parent, SWARA Limited is the subsidiary. So fair value of SWARA Limited net assets were equal to their book value with an exception of an item of plant, which had a fair value of 800,000 in excess of its book value at the date of acquisition. Now this is basically what we refer to as the fair value adjustment, the fair value exercise. It is the process through which the subsidiary company revalue the assets. So this company revalued the asset on the date of acquisition. But remember, you said once the subsidiary company has revalued the asset, does the subsidiary company account for that? No. Therefore, we said in preparing the group accounts, we make 2 adjustments. Number 1, we need to determine the revaluation gain. And number 2, we need to compute depreciation at a charge. That's what you need to recall. And you'll come across these adjustments in all questions for group accounts. So this is one of the key consolidation adjustments. You must be able to understand how to deal with it. So therefore, even before we move to sentence number 2, we are told this company SWARA revalued the asset, and actually we are told the book, the fair value was equal to the book value with an exception of an item of plant, whose fair value was 800,000 in excess of the book value. Now, number 1, we refer to this as the fair value adjustment. The fair value adjustment. In other terms, we refer to that as the fair value exercise. So the first thing we need to determine here is the revaluation gain or loss. So we are told this item of plant, its fair value was in excess. The fair value was in excess. The fair value was more than the book value. Remember, the book value is the same with the carrying amount, with an amount of 800. Remember, if you go back to the income statement up there, the balance sheet up there, our values are given in thousands of shillings. When taking any figure from the additional information, we omit the last 3 zeros. So that figure, therefore, we take it as 800,000. So if the fair value is more than the book value or the carrying amount, this one is known as a revaluation gain. Remember, this revaluation gain was not accounted for by the subsidiary. So we said, therefore, this one, how do we account for it? Number 1, in preparing our consolidated statements of financial position, we add it to the group PP. We add it to the PP, that is, we add it to the PP. Number 2, we say that this one is basically a pre-acquisition revaluation reserve. Is a pre-acquisition revaluation reserve for who? For SWARA. Being a pre-acquisition revaluation reserve, we say that when computing the goodwill, this will form part of the net asset. Because we say in computing the net asset of this company, for the purpose of computing the goodwill, we take the ordinary share capital of the subsidiary plus pre-acquisition reserve. So this will be one of the pre-acquisition reserve. Other than adding it to the group PPE, we will also treat it as a pre-acquisition reserve in computing the goodwill. Then from there we say, other than computing this revaluation gain, number 2, once this company revalues the asset and does not account for that, number 2, we need to compute something called the depreciation under charge. And basically I give you the formula for computing this. So remember this depreciation under charges by this company, by Swara Limited. Swara Limited. So how do we compute this one? I gave you a formula. We said we take the revaluation gain, we divide that with the remaining useful price of the asset, and basically multiply that with the proportion of time. The proportion of time basically we say is the time difference between the date of acquisition and the date of consolidation. And basically we have said from the date of acquisition to the date of consolidation, we have 9 months. So therefore, our proportion of time here will be 9 all over 12. That is the proportion of time. We are interested with the depreciation under charge for 9 months out of 12. So in our case, we already have this one, the revaluation gain, which is this one. Then we go back to our question, and basically we identify this. We must be given the remaining useful price still in note number 1. Let's go back to note 1. And I think in sentence number 2, we are told that the remaining useful price of all of Swara Limited plant at the date of acquisition was 4 years. And this period has not changed as a result of acquisition. And then you're told depreciation on plant is on a straight line basis and charged to the cost of sales. And then you're told Swara Limited had not adjusted the value of its plant as a result of the fair valuation of the asset. In other terms, what you're told in the last sentence of note 1 is that when Swara Limited devalued the asset, it never accounted for that devaluation. That's why we are saying we will account for this revaluation gain, and number 2, we compute the depreciation under charge. I hope you can see we are given the remaining useful price there as 4 years. Can you see the 4 years? Yes, 4 years in sentence 2. And then we're using this formula. We say this formula is very, very important. We need to multiply that with the proportion of time, which is 9 all over 12. So this is how we compute the depreciation under charge. So how much is the depreciation under charge here? The depreciation under charge is basically 800 divided by 4 times 9 divided by 12. And basically this one will give us an amount of how much? What are you getting? Yes, 150. So how do we account for this? Or which items will be adjusted with this? Number 1, we are told in that point number 1, depreciation is included within the cost of sales. So this one, we say when preparing the consolidated income statement, any depreciation under charge unless otherwise added to the cost of sales. That is the first adjustment. Number 2, in preparing our consolidated balance sheet, this one we also said we less it from the PP because the depreciation which was deducted here was less. So we also deducted there. And also this one we will deduct it from the retained earnings of this company. We said that once a company had a charge depreciation, then its profit was overstated. Those are the 3 items to be adjusted with that word amount. We add it to the group cost of sales, we less it from the PP, we also less it from the retained earnings of who? Of Swara. So therefore, this adjustment note number 1, that is something I want you to understand very well. Because I've said you come across this in all questions. I've got this one is an adjustment will come across in all words, all questions for group account. You'll be told the subsidiary company devalued the asset but never accounted for that. So it's upon you to know that you need to determine the revaluation gain, which items should be adjusted with that. Number 2, you also need to compute depreciation under charge. How do we compute the depreciation under charge? We take the revaluation gain, divide that with the remaining useful price, and then you multiply that with the proportion of time. So once you have computed that depreciation under charge, then which items will be adjusted? Number 1, when preparing the income statement, you add it to the group cost of sales. Number 2, when preparing the that is consolidated income statement, you add it to the group cost of sales. When preparing the consolidated balance sheet, consolidated statement of financial position, you less it from the group PPE, and then you also less it from the retained earnings. Retained what? Earnings bet. Yes. So these are the adjustments which are required as far as that is concerned. Yes. So let's move to the other point number 2. In point number 2, we are told in the post-acquisition period, TUI Limited sold goods worth 3 million to Swara. So first of all, what do you mean by the post-acquisition? Post-acquisition. First of all, what do you mean by post? Post means what? Post means after. Post means what? After. After. This means after. So therefore, when talk about the post-acquisition period, we are referring to this period here. The period after our subsidiary was acquired. So this is the post-acquisition period. So we are told that TUI, this one, sold goods to Swara. worth 3 million. Now, which name is given to that? Sales between the parent and the subsidiary. I hope you can be able to recall the name we gave to this. We refer to this as intragroup trading, or this kind intragroup what? Sales. Intragroup trading or intragroup what? Sales. So this one was 3 million. But remember, we have said all the values, we take them in thousands of shillings. Now we say any sales between the parent and the subsidiary, we said has to be eliminated from the group sales and the group cost of sales. So in this case, this amount here, this one will be less it from the sales. Once we add the sales for this and this, we less 3,000, and also this one should be deducted from the cost of sales. Once we have added the cost of sales of this and this, we also left what? 3,000. So therefore, when preparing the consolidated income statement, any sales between the parent and the subsidiary, you less it from the group sales, and also you less it from the group cost of sales. Yes. And therefore, also once you see this intra-group sales, you'll also come across now two other adjustments. An adjustment for amount of intercompany debt and an adjustment for unrealized what? Profit. So let's go back to that point to see what you are told. We are told that this good had cost TUI 2,250,000. So mean that the cost of this goods to this company is 2,250,000. And then you're told during the year, Swala Limited managed to sell. So this point, the examiner tried to trick the student. But basically, all this information which is given here is to help us to compute what? The aggregate profit. So, and then you're told Swala Limited managed to sell 2.5 million of these goods, 2.5 million of the 3 million, shillings 3 million goods from TUI for 3,750,000. So there is a lot of information which is given by the examiner here, trying to confuse the student. But remember what we said. In case this company sells some goods to this company made a profit. That's what we said. But we say this profit will only be realized if all the goods which were sold to this will have been sold to third parties. So therefore, if some of the goods remained unsold, or if Swala Limited was not able to sell some of the goods, automatically we need to compute the unrealized profit. So therefore, because we are told Swala was not able to sell all the goods, we need to compute the unrealized profit. Unrealized profit on those goods. And this unrealized profit, abbreviated as URP, unrealized profit is always by the selling company. The selling company is this one. So this made a profit, but part of it was not yet realized. So it is always important to note that unrealized profit here is by the selling company. How do we compute this? We said we compute this by taking the unsold goods. I gave you this formula times the gross profit margin. So, but if you check on this particular question, the examiner has not given us, in fact, the margin. Have we given the gross profit margin? No. No, we are not given the gross profit margin. But basically, from what you did in financial accounting, we can be able to compute the gross profit margin, because who can be able to remind us the formula for computing this gross profit margin from financial accounting? How do we compute actually, we did this in the topic of ratios. We did this in the topic of ratios. That topic of ratio analysis. How do we compute the gross profit margin? Yes, in this case, we take the gross profit all over sales times what? Times 1,000. Yes, so we computed this in the topic of ratios. Now, let's go back to point number 2. We are told TUI Limited sold goods worth 3 million. So 3 million is the sales, this one. And then we are told that this goods had cost TUI 2.25. So meaning that we are given the sales, in other terms, the selling price, which is 3 million. And then we are given the cost, which is 2.25. So what that means that the difference between the two are 750,000. What is that? That is automatically the gross profit. The difference between selling price and cost is the gross profit. So kwa hivyo gross profit is this one, 750. And then to get now this one, I've taken the gross profit in the sales. The gross profit is this. The sales is this times 100. So I want us to compute this one, the gross profit margin. So these are 3,000. So and that will go, that, and then we have 2.5. So mean that the gross profit margin as a percentage is what? Is 25%. Yes. So that is the basic trick there. So we already have the gross profit margin, 25%. And then we need to determine out of these goods, because there is a lot of information which are given here, out of these goods which were sold by TUI Limited to Swala, to Swara Limited, remember the goods had a value of 3 million. So what we need to do is to determine out of these goods, how much goods were not yet sold. How much goods were not yet what? Sold. How much goods were not yet sold? Were not yet sold. What is the question, Betty? No, Betty, don't confuse yourself. Don't confuse yourself, Betty. Just these points are not that complex. So I think you're given a selling price. Chewy sold goods, 3 million. That is the selling price. And then you're told the other point. Don't even move to the last point. The other point you're told the cost of the goods was 2.2 million to 50,000. Si tumepewa sasa selling price na cost. So Kenya tumetafuta ni gross profit. So what we want to do here is to compute the gross profit margin. We already have the formula here. Gross profit margin is equal to gross profit, which is the difference between selling price and the cost, this one. And we have the sales. Yes. So basically we have gotten the gross profit margin here. So then what I want us to do here is basically we determine out of these goods, which we sold to Swara, the goods had a value of 3 million. So I want us to determine the value of the goods which are not being sold. Can we go to the last sentence? I want us to read that sentence very well. You tell me the goods, because you're given, I think, like 3 values. We are told during the year, Swara Limited managed to sell, because this is all about understanding. This is not something Morimu will teach. I will teach them the examine twist it again. So during the year, Swara Limited managed to sell 2.5 million of 3 million shillings, 3 million goods from Chewy for 3,750,000. I want you to tell me, out of these goods, which had a value of 3 million, which Chewy sold to Swara, how much goods were not yet sold by Swara? That is what we want to determine, the unsold goods. From that point, that is all about understanding. That is all about understanding. That is all about understanding. I've said it is not something Morimu need to teach. It's all about understanding. Yes, this is very much correct. So we are told out of these goods of 3 million, then Swara Limited had managed to sell goods of 2.5. So out of this, Swara had sold 2.5. So the unsold goods, therefore, is 500. So ignore the other value of 3,750,000. That is just to confuse you. So we are interested with this unsold goods. The unsold goods basically is what? Is 500,000. Yes, that is our interest. So what we need to do is basically to proceed and we compute what? The unrealized profit. So how much is the unrealized profit here? 25% of that. 25% of 500. So this one will give us what? This one will give us 125. 125, yes. So now we need to record the adjustment for this. Number one, this one we said in preparation of the consolidated income statement, we added to the group cost of sales when preparing consolidated income statement. When preparing consolidated balance sheet, 2 adjustments. Number one, we say that this one should be deducted from the group, from the inventory. You see, when recording the current asset, one of the item of current asset is inventory. So once we add the inventory for this and that, we said we less what? And it is profit. So we less it from the inventory. And number three, we also less this from the retained earnings of this company, the retained earnings of Swara. In the retained earnings of Swara, there is a profit, but that profit was not yet realized. How much? 125. 125. So that is how we compute that. Although in that point, the examiner gave some information which was intended to confuse the student. But basically what you needed to do, number one, compute the gross profit margin as a percentage, and then determine out of these goods of 3 million, how much goods were not yet sold. Sasa? Yes. Yes. So I hope to cover more. So to December, these questions for group accounts, they have so many workings, but with maybe practice, tukifanya swali ya tatu, you'll be able to understand them. You'll be able to see now they're quite what? Simple. Sasa? Yes, don't say it is a little bit hard. Once we do this one, we do another question. By the time you'll be doing the third one, you should be able to understand all these concepts. All these what? Concepts. Sasa? Yes. Let's move to point 3. In point 3, we are told the current account of the 2 companies were reconciled at the end of the year, with Swara Limited owing Chewy 187.5 million. So anytime you see Swara Limited owing Chewy, this is what? Amount of intercompany debt. Because remember, these companies also are good to Swara. And basically for this question for group account, don't overthink. So this sold some goods to Swara. So automatically Swara was supposed to pay Chui for these goods, was supposed to pay Chui 3 million. But now what we consider is the amount not yet paid. So we are told at the end of the year, Swara Limited had not paid what? 187. So this 187 is the amount of intercompany debt. Number 5, we have amount of intercompany debt. So this one in thousand of shillings is 187.5. This one, number one, we said we less it from the receivables. And this amount of intercompany debt in this question is the same. Less it from the receivables and also less it from the payables. That was what we said. That one is quite simple. So then we move to point number 4. Point number 4, we are told, I hope you're together. Point number 4, we are told the goodwill was reviewed for impairment at the end of the reporting period and had suffered an impairment loss of 75,000, which is treated as an operating expense. So in that case, we will compute the goodwill on acquisition of this, and basically that goodwill was impaired. Being impaired means that the goodwill had lost a value of 75. So we will only account for that once we have computed the goodwill. Goodwill, we computed as the last item. Yes. Note number 5, we are told Chui Limited and Swara Limited retained earnings on 1st of July 2024. Remember, 1st July 2024 is basically the start of this year. That's what we said. So we are given the retained earnings of these two companies at the start of the year. We'll be able to explain why we are given this. Usually the retained earnings is given to help us in terms of computing the retained earnings of this company, Swara, at the date of acquisition. And that one is required when computing the goodwill. So we can skip it at this point and be able to explain further on that, specifically when computing the goodwill. So let's move to point 6. We are told it is the group policy to value non-controlling interest at the date of acquisition at fair value. So we said if you come across this information, that is the policy of the group to measure NCI at fair value. Which method are we supposed to use in computation of goodwill? Who can be able to record? When computing goodwill, which method are we supposed to use? Which method are we supposed to use? Yes, it is the policy of the group to measure NCI at fair value. So remember, there are two methods of computing goodwill. There is a full goodwill method, there is a partial. Betty, there are two methods, the full goodwill method and partial. Which method are we supposed to use here? And Sharon, the full goodwill method. Full goodwill method. Sasa, yes. So we are going to use that equally when computing the goodwill. And also in the same point, you are told the directors valued NCI at 625. Then number 7, you are told revenue and expenses are assumed to accrue evenly. So the reason why we are given that information is basically to know that when taking the revenue and expenses of this, we are going to apportion it on time basis. I think with that, we can be able now to do the next working, which will be goodwill, computation of goodwill. Remember, computation of this goodwill may be part of the requirement. For example, we say in some questions, you may be required to compute goodwill as the first item, and you are given like 4 marks or 6 marks. But in our case, it is not part of the requirement, but basically we have to do what? We have to compute that goodwill on acquisition. Goodwill on what? On acquisition of who? Of Swara Limited. Which method are we using here? We are using the full goodwill method. We are using the full goodwill method. We are using the full goodwill method as per note number, as per the information we have in note number 6. Now, I hope you can be able to recall how we said we compute the goodwill using this method. Always here we said we start by taking the purchase consideration, which was paid by parent company. How much purchase consideration was paid by the parent company? That one is given within paragraph 1. When the parent company acquired 80% of the shares in Swara, how much amount was paid? In the first paragraph, the first sentence, the parent company paid 25.70. So I hope you can see that in the first paragraph, the first sentence, purchase consideration paid by the parent. And then to this, because we're using the full goodwill method, we add the NCI at fair value. Now the NCI at fair value, this one is given in note number 6. Is given in note number 6, and basically that one is 625. 625. So first of all, we add these two. We add those two values. We add those two values, 2570 plus the 625, and basically that one will give us a total 31.95. No much problem with that. Then to this, we said we proceed and we less the fair value of a subsidiary company net asset, or in other terms, we left, that is the fair value of a subsidiary net asset. In other terms, I think let's just put it like this: we less the fair value of net asset acquired. Yes, let's put it like that. The fair value of the net asset which were acquired. This is something also I want you to understand very well. When it comes to the computation of goodwill, this is where majority of the students get it wrong. Now, if you can be able to recall in our previous class, I said what you need to compute here is the fair value of the subsidiary company net asset on the date of acquisition, because we are interested with the net asset which were acquired by the parent and also by the minority shareholders. So you need to compute the fair value of the subsidiary company net asset on the date of acquisition. And I think I guided you on how to compute that. We said we take the subsidiary company ordinary share capital, subsidiary company ordinary share capital. This is something we noted down, plus the pre-acquisition reserves. Plus the pre-acquisition what? Reserve. This one you must get it very well. You have to remember that. Sasa? Yeah, so the first thing we do, can we take this one? We take the ordinary share capital. Let's just put it that this is the subsidiary company ordinary share capital. Automatically, this one we get it from the balance sheet at the equity. So we go back to the balance sheet of Swara at the equity. We take the ordinary share capital of Swara. So the ordinary share capital of Swara from its balance sheet, how much is that? Can you see the share capital of Swara? The share capital of our subsidiary, which is Swara, how much is that? It is basically 500. It is what? 500. Can you see that? 500, the share capital of the subsidiary. Yes, it is 500. It is what? 500. Yes. Then to this, we add this pre-acquisition reserves. Now, we have a number of them. But generally, if, for example, at the equity, can you go back to the balance sheet of Swara at the equity? So in most of the questions, you'll be given share premium there. Share premium. So, but in our question, we don't have any share premium. So if you're given a share premium in the balance sheet of the subsidiary, and the question is silent, there is nothing which the examiner has told you about that share premium of the subsidiary. Remember, share premium is a reserve. So you include it here. You treat it as what? As one of the pre-acquisition reserve. If you're given a share premium here, the question is silent. There is nothing the examiner has told you about that share premium. You always treat it as a pre-acquisition reserve. In our case, we don't have that. Now, the other item we should also include here is any revaluation gain which occurred on the date of acquisition. If the subsidiary company revalued assets on the date of acquisition, that revaluation gain which occurred on the date of acquisition also included here. In our case, do we have such a revaluation gain which occurred on the date of acquisition? Did the subsidiary company revalue the asset on the date of acquisition? If yes, was there a revaluation gain? Did our subsidiary company revalue the asset on the date of acquisition? Yes. It revalued asset on the date of acquisition, this company, and there was a revaluation gain of how much? How much was the revaluation gain? How much was the revaluation gain? Give me that value so that we move to the other item. This one, whatever you have in note 1, this one, and basically we noted that here very well, that this one is a pre-acquisition reserve, also included here. So 800, like such. Then from there, you also need to consider the other pre-acquisition retained earnings. Sorry, pre-acquisition reserve, and that is the retained earnings. That is the retained what? Earnings. Now, don't take the retained earnings which we have in the balance sheet of Swara, because the retained earnings of 21, which are given in the balance sheet of Swara, is at the end of the year. At the date the balance sheet was prepared. We're interested with the retained earnings of Swara on the date of acquisition, this date here. This date, that is 1st of October 2024, because here we say we are interested with the retained earnings of Swara on the date it was acquired. Don't take that retained earnings in the balance sheet of Swara 21, that is at the end. Now, in most of the questions, the examiner will give you this, but in most of the questions, especially whereby the subsidiary was acquired in course of the current year, like this subsidiary, the examiner will not have given you that. What the examiner will give you, the examiner will give you the retained earnings of the subsidiary at the start. Like in our case, we know that this year of the group, basically, if you go to the requirement ended on that year of June, the year ended on that year of June 2025, that is when the year ended. that year of June 2025. And basically, I've said this year started on 1st of July 2024. So then we know that our subsidiary was acquired on 1st of October 2024. And basically, I've said this 9 months to the end of the year, automatically 3 months from the start. From this date to this, we have 3 months. From this date to this date, we have 9 months. So can we go to note number 5? In note number 5, we are told Chui Limited and Swara retained earnings on 1st of July 2024 here. It was 41, 31 to 50 and 1350. Now, what we are interested with is the retained earnings of Swara at the start here. So we're interested in the retained earnings of Swara at the start, which is basically 1350 there. So that is what we have. Then, if you go back to the income statement of Swara, we are given the profit for this year. We are given the profit for the year. Can we go to the information we have below paragraph 1 up there, where we have the statement of profit or loss? So in the statement of profit specifically of Swara, what I want us to take there is the profit for the year. How much is the profit for the year for Swara? Profit for the year for Swara is how much? Profit for the year for Swara in Gapi. Yes, that one is 750. That one is 750. So this is basically what the examiner will have given you. This is what the examiner will have given you. Alternatively, basically, if you take this plus this, that one will give us 21. And basically now this is what we have in the balance sheet. If you go back to the balance sheet of Swara, that is the retained earnings at the end. So in fact, in most of the questions what the examiner will give you, the examiner will have given you this one. The retained earnings at the end, the profit for the year, part of all you determine this. Basically, we know to get this, we take the retained earnings at the start, plus this, we get that. That's how. So the examiner will have given you this and this. So the first thing you need to do is to determine that. Now, what we are interested with here is the retained earnings on this date. That is the retained earnings on that date, the date of acquisition. How do we get that? You understand this very well. We take the retained earnings at the start, this one, 1350, this one, and then we add the profit which was generated by our subsidiary before it was acquired. We know for the whole year, our subsidiary generated this profit of 750. Can we be able to determine the profit it generated here? Yes. What we do, we take the profit for the whole year, and then to get the profit which was generated here, we multiply that with the proportion of time. We know that is basically is a profit for the whole year. We can divide that with 12 to get the profit of each month. How many months do we have here? We have 3 months. So the profit which was reported by the subsidiary here will be equal to the 750 divided by 12 times what? Times 3. So once we add it to this, it will give us the retained earnings on the date of acquisition. That is now what we're interested with. And this basically what will come across in most of the questions for group account. Yes. So let's work out that. Because I've said what we consider here is the retained earnings on which date? On the date of acquisition. On the date of acquisition. So we have 750 divided by 12 times 3 as 1350. Basically, that one will give us 15. That is 7.5. I hope that is what you're getting. Is that what you're getting? Confirm so that we move to the other items. Is that what you're getting? Yes. So then we add all this. We don't have any other pre-acquisition reserve. So we have considered share premium, which we don't have, revaluation gain, which occurred on the date of acquisition, and the retained what? And so we add all this. We add 1300. And basically, the one will give us 28, 37. Now, in this case, we're using the full goodwill method. Anytime you're using the full goodwill method, you take 100% of this. Because in our case, we're interested with the net asset acquired by the parent and the subsidiary. So the parent and the subsidiary acquired 100% of the net asset of Swara. Take 100% of this. 28, 37, point what? 0.5. We erase it from the figure up there. So that will give us 357 point what? 0.5. What is this? This is basically the goodwill arising on acquisition. Now, this goodwill we said is an asset, and therefore it tends to lose some value. If we go to note number 4, we are told the goodwill was reviewed for impairment at the end of the year, at the end of the reporting period, and it has suffered an impairment loss of 75. So this goodwill had lost a value. Suffering an impairment loss means it had lost a value of 75 million. So that impairment loss reduces the value of goodwill. And impairment, just like depreciation, we account for it as an expense. So this one will give us 282.5. So this is now the value of the goodwill at the end of the year. And this is now what we will take to the consolidated statement of financial position as a non-current asset. As a non-current what? Asset. As a non-current asset. As a non-current asset. As a non-current what? Asset. As a non-current asset. As a non-current asset. Only this value is given in paragraph 1. Purchase consideration paid by the parent is in paragraph 1. Is in paragraph 1. Purchase consideration paid by the parent, 2570. 25 what? 70. Purchase consideration paid by the parent, paragraph 1. Yes, I think now we can proceed and prepare what is required in Roman 1. Let's move to Roman 1. I hope you can see that figure, Bonnie. Purchase consideration paid by the parent. So we start by preparing the consolidated statement of profit or loss, which is basically for the year, which ended 30th of June 2025. 30th of June 2025. 30th of June 2025. Now, in this case, we need to have a single column here. And recall, we say to prepare this one, we basically need to combine. We need to combine similar items of revenue and expenses, those of the parent and those of the subsidiary. But recall, this subsidiary was acquired 9 months to the end of the year. And therefore, we say we take its revenue and expenses only for 9 months. So to prepare this, we are taking the revenue of the parent or the sales of the parent plus that of the subsidiary. And also we do the same for the expenses. So we prepare this from the statement of profit or loss for individual companies given below paragraph 1. Can we go back to the information we have below paragraph 1? And actually we use the format given here. We start with the sales revenue. Sales revenue. I will take that of the parent. That of the parent is 15,000. Then to this, I will add that of the subsidiary. But basically for the subsidiary, I'm not adding the full amount because our subsidiary was acquired 9 months to the end of the year. We can only take the revenue for 9 months. That's how we apportion that on time basis. And that only applies to who? That only applies to the subsidiary. So we take 6,000 times 9 all over 12. And I hope you can see this 9 all over 12 is only applying to this. That does not apply to the revenue of the parent. That's how it only applies to the revenue of the subsidiary. So we can cross the bracket here. And then there is only one item which we adjust to the sales or to the revenue. That is sales between the parent and the subsidiary. Whatever we had here, intra-group trading, we say that one should be deducted from the sales. The full amount, the which is 3,000. We don't have any other adjustment. I think we can have all the workings, the values here, and then we go back and we compute those values, all of them, so that we move a little bit faster. So then for the cost of sales, we take that of the parent, which is basically 10,500. We add that of the subsidiary, which is 5,000, but also recall, for the subsidiary, we are not taking the full amount. We are taking for 9 months. So we multiply that with the 9 all over 12. And I'll say that is only applying to the items of the subsidiary. Then, do we have some adjustment to be made to this? Yes. To the cost of sales, we have a number of adjustments. The first one is this one. This depreciation other charge of 150, we add it. We add it here. So then from there, we also have this unreleased profit of 125. We also add it here. 125. Do we have any other adjustments? No. We will get the final values here. And then we get what? We get the gross profit. So after the gross profit, we will add the operating expenses. The operating expenses, I will take those of the parent, which is the 1,500, plus those of the subsidiary, which is 50. Is it 50? Yes. But now this one also recall, we are not taking the full amount. We apportion that on time basis. We are only taking expenses for 9 months. And then there is also what we are given, this impairment loss, note number 4. Can we go to note number 4? We are told the goodwill was reviewed for impairment at the end of the year, and it has had an impairment loss of 75, which is to be treated as operating expense. So this impairment loss, this one is basically an expense and an operating one. no any other adjustments. So then from there, we have down there, we have their own interest received and their own interest paid. I think we're going to separate those two items because we have interest received, interest paid. I think we can start by recording their own interest received. And actually, we have equally working for this. Their own interest is the one which is positive. The one which is positive, that is for the parent, that is Chui. That is 18.75. Now, there is some adjustment for this. Can we go back to the first paragraph? Let's go back to the first paragraph. Now, tumesema this question for group account, don't overthink. Don't overthink. If you overthink, they may become a little bit difficult. Don't overthink. Try to relax and basically understand what Morimo is doing here. By the time you'll be doing the third question, you should be able to understand what you're doing. So the question will start becoming simpler. Now, we go back to paragraph 1, specifically sentence number 2. In sentence number 2, we are told on the same date, basically that is on the date the parent company acquired 80% of the shares in Swara. On the same date, it's also acquired 50%. 50% is the same with half of Swara Limited 10% raw notes. Now, can we go back to the balance sheet of Swara? Balance sheet of Swara, and you tell me the value of the 10% raw notes. 10% raw notes issued by Swara. So basically, we know that raw notes is an non-current liability. So from the balance sheet of Swara, the 10% raw note issued by Swara, they had a value of how much? Can you be able to see that? The 10% raw notes issued by Swara, which is a non-current liability, they had a value of 500. So basically, what we are told is that the parent company basically made 2 investments in this company. It acquired shares, ordinary shares, and also it acquired this. Are we together? Now, it basically means that when Swara Limited paid interest on these raw notes, part of that interest was paid to the parent, because if the parent company has acquired raw notes of the subsidiary, if the subsidiary has paid interest, part of that interest will be paid to who? To the parent. Now, we said that this is an investment income which is generated within the group. We said any investment income generated within the group, don't include it here. Now, we need to compute how much interest did our parent company here received from Swara. It's quite simple, because we know that the parent company didn't acquire the full amount of raw notes. In fact, as per the first paragraph, sentence 2, we are told the parent company acquired 50% of this. 50% of this is what? Is 250. So what I want us to do here is we compute the interest received, because this is now what the parent company accounted for. The interest received by Chui Limited from who? From Swara. So that will be equal to what? It will be equal to 10%. 10% of this one, 250. And also the interest which was received was not for the whole year, because these raw notes were acquired on the same date the shares were acquired. So mean that this company received interest for just 9 months, because these raw notes were acquired 9 months to the end of the year. So the parent company received interest for 9 months. So this one, remember, is the interest for the whole year. We compute interest for 9 months, 9 over 12. This one will give us what? It should give us this value here, 18.75. So can we compute that? 10% of 250 times 9 over 12. You can see it's giving us that value. Are you getting that value here? 10% of 250 times 9 over, yes. So this, whatever the parent company accounted here as an interest received, this is the interest received from who? From Swara. This one, I've said, is an investment income generated from within the group. Are we supposed to include it here? No, that's what we said. So here we only include investment income generated outside the group. So therefore, that one should not be included here. And then I said we separate the interest, loan interest received and loan interest paid. So what then we need to consider is the loan interest which was paid. The one which was paid is the one which was paid by the Swara. Swara paid 50. But equally, recall, we are not considering the interest for the whole year for Swara. We are only considering for 9 months. Yes, so this is the interest which was paid for 9 months, 50 times 9 over 12. Then this interest which was paid by Swara, we know part of it was paid to the parent. Also eliminate that. The interest which was paid by Swara to the parent. How much is it? This one. 18.75. 7.5. I hope you can see what you have done. We have computed the interest which was paid by Swara purely for 9 months, but we have also eliminated the amount which was paid to the parent. Sasa, yes. So we will get the final values there. So let's go back to our income statement. We will get the profit before tax, and then we less the income tax expense. Now, the income tax expense usually in question for group account is one of the 3 items. No single question for group account will come across whereby this item is to be adjusted. So we just take the income for the parent, income tax of the parent, 750, plus that of the subsidiary, which is basically 150. But recall also, we are not taking the tax for the whole year. We are only taking tax for 9 months. Anything relating to the subsidiary, 9 months. And I think then we will get the profit after tax. So I think we can get now these final values. Let's get these final values, starting with the revenue up there. Starting with the revenue, I think we have 6,000 times 9 divided by 12, which is basically 45, plus 15,000 minus 3,000. And basically I'm getting 16,500. Confirm, make sure you're confirming all those values. We move to the cost of sales. We have 5,000 times 9 divided by 12. Sorry, and there is something we forgot to trace here from the cost of sales. Don't forget this one, the intragroup sales. So we also needed to less 3,000 here. This intragroup trading, we less it from the sales, we less it from the cost of sales. We should not forget that one. So we have that is 750 plus 10,500 minus 3,000 plus 150 plus 125. How much are you getting here? I'm getting 11. Is that what you're getting? 11,525. Confirm whether you're getting those values then. Betty, Bonnie, are you getting those values? Yes. Okay, Sarah. So that will be the gross profit. The gross profit, you compute sales minus the cost of sales. Operating expenses, we have 50 times 9 divided by 12 plus the 1,500 plus the 75. And basically this one will give us 12.5. Make sure for the expenses, you record them inside the bracket. Their own interest, we have 50 times 9 divided by 12 minus 18.75. And basically I'm getting 18.75. This one basically we said is 0. Yes. And then we will get what? The profit before tax. The profit before tax. So and I'm getting a value of 43.75. Confirm whether you have that value there. Tax. Yes, so if you're getting those values, you confirm. Cost of sales. I'm told cost of sales, my value is wrong. Is that the case? Yes, Betty, there is 3,000 to be deducted. That's it. Betty, there is 3,000. I hope you have deducted the 3,000. Yes. Deduct the 3,000. Yes, confirm whether that is the final value you're getting. Confirm whether that is the last value you're getting here. Confirm. Okay, Sarah. So I think now with that, basically we are done. So let's move and prepare what is required in Roman 2. So usually like these questions in terms of how they are marked is like any 4 at 2. You just need to get like 4 items here because these are what will be marked 2, 3, 4, 5. So you just need to get like 4 items. Yes. So let's move to Roman 2. Consolidated statement of financial position as at 30th of June 2025. As at 30th of June 2025. So how do we prepare this one? Basically, this one we prepare it by adding similar items of asset and liabilities. Similar items of asset and liabilities, those of the parent and those of the subsidiary. No, there is no. In fact, those who mark don't check anything here. Markings are not marked. Mark is equal pare. Yes, mark is equal pare. So because you may do all these workings, by the end of the day, you can see the 8 marks are allocated for what? 8 marks are allocated for that. Yes, so if you don't prepare that one, you get 0, even if your workings are correct. Yes. So in this case, we have just one column. So here we add assets and liabilities, those of the parent, those of the subsidiary. What is important here is that for you to note that for the assets and liabilities, we don't apportion them on time basis. The reason being that a statement of financial position is prepared at the end of the year, as at the end. So even if a subsidiary is acquired 1 month to the end of the year, 2 months to the end of the year, 3 months to the end of the year, never apportion the asset and liabilities on time basis. That only applies to the items of income statement. Yes, never apportion the asset and liabilities on time basis. There is also another mistake which majority of the students do. When taking asset and liabilities of this subsidiary, they take 80%. No, don't do that. You take the full amount, the way we have done to the income statement. So even if the parent company has not acquired 100% shareholding, don't take 80% of the assets, the liabilities, revenue, and expenses of this. So let's prepare this one. And actually, we prepare this using the statement of financial position for individual companies given below paragraph 1. So the first item we record here is the property, plant and equipment. We can just refer to it as PPE. So we take that of the parent, 4830 plus that of the subsidiary, which is 2,000. And I've said never make a mistake of apportioning this on time basis. Never make a mistake of taking 80% of assets of SWARA. Take the full amount. And then do we have some adjustment? Yes. So we have some adjustment here from note 2. 1, we have this 800, which we said we add to the PPE. And then we also have this depreciation other charge. We said we less. 2 adjustments. We add 800, and basically we add, and then we minus 150. Any other adjustment? No. Then from there, below that, we have investment. Now, this investment, the examiner will not tell you this, but basically this is the amount of money which the parent company invested in the subsidiary. So the investment here is 2820. Now, we know the parent company made 2 investments in the subsidiary. Can you be able to recall that as per paragraph 1? The parent company invested in shares, and also number 2, the parent company acquired raw notes. So that is what is included here. So don't include that amount here because that is an investment within the group. Like we know, when the parent company acquired 80% of the shares, this is the amount which was paid. 25.70. That is the amount which was paid in acquiring shares. Then still in note 1, we know that the parent company acquired raw notes in SWARA, which had a value of 250. So if the question is silent, the amount which was paid is equal to the par value of the raw note. So meaning that when the parent company or the amount paid in acquiring raw notes of SWARA is equal to this 250. So that one is also included here. So if you take this minus that, that one should give you 0. Should give you what? 0. So that is the investment within the group. Don't include it there. Sasa? Yes. Are you getting 0? Yes, that one should give us 0. Now, what else do we include here? The other item we include here is the goodwill on acquisition. The goodwill on acquisition, which we computed here, which is 282.5. That goodwill, we recognize it here as an asset. Then from there, we have now the current asset. Current asset is kind of given as a total. So for the current asset, we add those of the parent, that is 750 plus 2000 plus 2000. But basically what we know is that current assets comprises of inventory, comprises of receivables, comprises of cash. Any adjustment affecting inventory, affecting receivables should be made here. Remember, number one, we have this amount of unreleased profit, this amount of unreleased profit, which we said we less it from the inventory. Inventory is part of the current asset. So we are going to less 125 here because inventory is part of this. We less 125 because inventory is part of the current asset. Then we also have this amount of intercompany debt, which is supposed to be deducted from the receivables. The receivables is also part of this. So we less 187.5. So let's have now the total assets. Because we don't have any other item of assets, we need to get the total assets. So let's get the final values here. We get the final value starting with the PP. So for the PP, we have 4830 plus 2000 plus 800 minus 150. I'm getting 74.80. I'm getting 74.80. What about the current assets? I have 3750 plus 2000 minus 125 minus 187.5. And basically I'm getting what? 54. That is 7.5. So we add all those values. You confirm whether those values are correct. 74.80. And basically I'm getting a value of 13,200, which is the total asset. Which is the total asset. Are you getting that value? Are you getting that value? Are you getting that value? So try to hurry up because of time. I want us to finish on time. I know you have another class from 4. Are you getting that value? Yes, that is confirmed by Ben. So I think now we can proceed and record items of equity. Items of equity. Items of equity. We start with equity. Equity comprises of share capital and reserves. And remember, I said in preparation of this, we only combine items of asset liabilities. We don't combine items of equity. So for the equity here, for share capital, we record that of the parent company only. That of the parent company only, don't combine. And the reason why we do that is because if you can be able to record that share capital of the subsidiary 500, that was used in the computation of this goodwill. Anything which has been used in the computation of goodwill, don't include it here. Sasa? Yes. Then below that, we have the retained earnings. This is an item you need to compute. We are going to compute it as the last working. So this is usually one of the items you'll be able to see its computation is a little bit complex. We can skip that in the meantime. So we will come back and basically compute it. No need to worry. Then we will get what? The total equity. The total equity is here. And then there is also something else we need to compute here, which is called the non-controlling interest. I'll be able to explain what you mean by this. We will also compute this. Now, as far as this question for group accounts are concerned, these are usually 2 items whose computation is a little bit complex, kidogo, but I'll be able to show you how to compute the same. We can skip them. And first of all, we record the other obvious items, starting with the non-current liabilities. So for the non-current liabilities, we only have one, and that is the 10% roll notes. The 10% roll notes we take for the parent, which is basically 0. And then we add that of the subsidiary. That of the subsidiary is basically 500. But if you can be able to recall, half of this, which is 250, they were issued to the parent. So what we need to do, those roll notes issued by the subsidiary to the parent, eliminate that here. Sasa, yes, don't include it here because that is an investment within the group. So you only include the roll notes issued to outsiders, not to the parent. And then from there, we have current liabilities. Current liabilities. Now, for the current liabilities here, we are given actually the total. We have 25. We then have 900. And then we know that current liabilities, this one includes payables. payables, and I hope you can be able to record we have this amount of intercompany debt, which should be deducted from payables. So be less 187.5. Any other adjustment to be made there? No. So let's get this value, and then we go back, we compute those amount, those two items. So I'm getting 3212.5. So then we will get the total equity and what? And liabilities. So it's equity and liabilities. Now, before we even get that, there are two items I need to show you how to compute them here. But I'll say, actually, during our revision, I'll be able to show you how the shortcuts of handling these questions within an examination setup. But also, there are a number of items we usually advise the student. Whenever you come across such a question in an exam, you don't have to compute all those items, like this and this, because you'll be able to see their computation is quite complex. So we compute this, and what we compute and include here is something called the group retained earnings, not just any other retained earnings, group retained earnings. How do we compute this? To compute this one, we take 100%. If you check on the notes I shared with you, I was not able to explain this because that is something you can only be able to understand by showing you how we compute it. We take 100% of parent company, this one, of TUI Limited retained earnings, and then we take 80% of Swara Limited post-acquisition retained what? Earnings. Don't include the pre-acquisition retained earnings here because the pre-acquisition retained earnings was used in the computation of goodwill. That's how we only include post. And we don't take the full amount, we take 80%. So that is basically how we compute the group retained earnings. That is the formula. Now, can we proceed and compute this? So basically here we need to have, remember this is a group retained earnings. So we need to have two columns for our two companies. So TUI Limited and the other company, which is called what? Swara. We need to have two columns here. Yes, so what we do, first of all, is we take the retained earnings as given in the statement of financial position. And we go to the statement of financial position of the two companies at the equity, we take the retained earnings. So let's go back to the balance sheet of TUI Swara. At the equity, we take the retained earnings from the statement of financial position. For this one is 64. This one is 21. This one is 21. But now this one for Swara, we have said we only consider the post-acquisition. What that means is that these retained earnings of Swara include the pre and post. So for us to get the post-acquisition, we need to less the pre. The pre-acquisition retained earnings. And this pre-acquisition retained earnings is the one we use in the computation of goodwill. Can you give me that retained earnings we used in the computation of the goodwill? The retained earnings we used in the computation of goodwill. Go back to where we did our computation for goodwill, and you give me that retained earnings which we used there. That retained earnings of Swara which we used there. That is the pre-acquisition. How much is it? How much is it? 1537 point what? 0.5. 0.5. Confirm that, please, Dagote. And Sharon, Betty, confirm that. Is that the retained earnings we used in the computation of goodwill? Yes. So we eliminate that. So we shall be left with the post-acquisition. And I'll say that one only applies to who? To the subsidiary. It does not apply to the parent. So we have 21 minus 1537.5. So we are left with 562.5. Like that. Sasa? Yes. So that is now the post. Now, before we get 100% of this and 80% of this, there are a number of adjustments which need to be made here. If you go through the workings, you'll be able to see the number of items we said we'll be able to deduct here. So one of it is this one. This is the depreciation under charge by Swara. We said we less this from the retained earnings of who? Of Swara. So we have depreciation under charge. Under charge. We deduct it from the retained earnings of who? Swara. 150. There. So no adjustment here. Then we have this unreleased profit. We deduct it from the retained earnings of who? Chewy. So we have an realized profit of 125. We raise it from the retained earnings of who? Of Chewy. Like that. Do we have any other adjustments which we need to make here? Any other adjustments we need to make here? Is there any other adjustment we need to make here? Yes, we have considered that. Yes, so there is also something else we should also raise here. And that is something called the impairment loss. So if you can be able to record this goodwill was impaired, that impairment loss is an expense to the parent, but the parent company has not accounted for that. So let's consider that here. Impairment loss. So now for the impairment loss, remember as per note number 4, it was what? It was 75 million. So what we should, let's hear from the retained earnings of the parent, should be the retained earnings for the, should be the impairment loss of the parent. Now this 75 relate to the goodwill of the parent and the goodwill of NCI. So the impairment loss for the parent company should be equal to 80%. I'll be able to explain where then we take the remaining 20%. So can we get 80% of that? Over 75. That one will give us what? That one will give us 60. That one will give us what? 60. So we raise it from the retained earnings of the parent. I think no any other adjustments. So can we get the final values? Get these final values. We take 64 minus this, minus that, and this one minus that. You give me the final values. Yes, give me these values here. Give me these values here. So 64 minus 125 minus 60. 60 to what? 15. I hope that is what you're getting. I'm not getting the answers. Then we have 562.5 minus 150. And basically I'm getting 412.5. 412.5. Then what we need to do, we need to apply these percentages. So we need to get something called the group share of this. The group share of this is 100%. The group share of that is 80%. 80%. So 100% of this is 62.15. And basically what about 80% of that is 330. 330. So to get the group retained earnings, we add these two. We take this plus that. We add the two values. Plus the 62.15. And basically that one, I'm getting a value here of 65.45. 65.45. That is the group retained earnings here. 65.45. Yes, I hope those figures are correct. I'm not getting any confirmation. So we add these two, and the total equity will be 90.45. Will be 90.45. I hope you're getting those values. So I've said no need to worry with this. In fact, I think I'll just show you in one to compute this in this one question, because this is an item even in an examination setup you can't be able to compute. So just try to understand it in this point, but maybe moving to the other questions, we will not be computing that, including the NCI, because these are items in an examination setup. We advise the student on compute those items. You can see the computation of that is quite complex. Is that the position, Bernard? Bonnie? Is that the position computation of that? You can see it's quite complex. Is that Dagote? Is that the position Dagote? Yes. So these are usually some of the items in an exam. We advise the student don't compute that. But no need to worry. This, once we start doing some revision, we'll be able to see how to get free marks. These questions, they have so many free marks. Now, there is the last item which is remaining here, and that is something called the non-controlling interest. The non-controlling interest. Basically, when we talk about the non-controlling interest, this refers to the amount of money which is invested by the minority shareholders. That's why we're including that as part of equity here. How much amount is invested by NCI in the subsidiary? So that is what we refer to as what? We refer to as the NCI at the end of what? Of the year. So basically, how do we compute this one? I'll also show you basically briefly how we compute this. So what we do is that we take the NCI at fair value, which is given, I think, in note number NCI at fair value, which is given in note number 6. This one is note number 6. The NCI at fair value is 6 what? 625. 6 what? 25. The NCI at fair value. NCI at fair value, which is 625. 625. Then what do we add here? What do we add here? So to this, we add something called the NCI share over post acquisition adjusted retained earnings. So we add the NCI share over post acquisition adjusted post, and this add the NCI of this is equal to 5, and then the NCI share should be 20%. The parent company share of this is 80. The NCI share of that is 20%. 20%. So can you give me 20% of that? Times 412.5. That will give us what? That will give us 82.5. And then 80% of this, was that correct? Because we 412.5 times 80%. Okay, this is correct. Yeah, it is okay. It is okay. Yes. Yes. Is there anything else we left here? Yes, I think we left the impairment loss. Impairment loss, which is attributable to the NCI. Recall, the full amount of impairment loss was 75. What we have considered here is the parent share, 80%. So then here we consider the NCI share. NCI share of this 75 should be 20%. That is the NCI share of that. And I think that one should be 15. That one, we left it here. We left it what? Yes, that will give us the amount of money invested by who? The NCI. No need to worry about this one. I know some of these items, their computation is quite complex, but don't worry. We have said these are some of the items you don't need to compute in an exam. You don't need to compute in an exam. You don't need to compute in an exam. And basically, I'm getting a value of 692.5. Confirm whether that is the value you're getting. Confirm whether that is the value you're getting. And I think we are done. I think we are done. We just need to get the totals here. We add all this. We add all this. It should be balanced at that value of 13,200. Let's confirm. So we have 9045 plus 692.5 plus 250 plus 3212.5. Yes, it should balance at that value. Should balance at that value. At that value of 13,200. Is that what you're getting? Yes, it should balance at that value of 13,200. Though basically what I've said is that I think moving forward, the other questions we will do, I don't even show you how to compute this one and this one, because I've said in such a question, you don't have to get all the marks. Because if, for example, you check the marks which were located there, I think, were they still 8? Yes, 8. So these are the items which were marked 1, 2, 3, 4, 5, 6, 7, 8. In most of the cases, you'll see that maybe this is how the question was marked, maybe any 4 at 2. You just needed, for example, to get 4 items correct for you to score all the 8 marks. So in these questions, you don't have to get everything correct. Meaning that if, for example, you get the PP, this one goodwill, the current asset, and maybe any other item, just 4 items. 4 items. For every correct item, you're given 2 marks. So that's why I'm saying, even if, for example, you don't compute this, you don't compute that, provided you have 4 items which are correct, you'll score all the marks. You'll score all what? All the marks. Yes. So what I want us to do, I want us to stop at that point. You just take your time, go through the question again. Especially this consolidation adjustment is now what you need to understand. This would remain constant in all questions. Fair value adjustment and this profit depreciation under charge computation of goodwill, these remain constant in all questions. You try to go through the question again, and then once you meet now next week, we will look on how we prepare the group accounts whenever the parent company has invested in a joint venture and associate. We will define what is associate, what is basically a joint venture, because here what we have done, we have looked on how we prepare consolidated financial statement where the parent company has invested in a subsidiary. So we will define what is an associate, what is a joint venture. Then from there, we do a question whereby we have 3 companies. If you check on most of the questions from those past papers, you basically see that you have 3 companies, mostly parent, a subsidiary, a joint venture, or an associate. So those are the common questions. This question, we had 2 companies. So most of the questions, you'll come across 3 companies. The 3rd company would be an associate or a joint venture. So that is a small concept we will just discuss, and then we do a question. We do what? We do a question. But I've said, even before we meet, make sure you go through what we have discussed in our 2 previous classes, what we have done here, because these are topics you need to understand. You need to do what? To understand. Yes, so we stopped at that particular point. I don't know whether there is any question. I don't know whether there is any question before we wind up. Any question before we wind up? Any question before we wind up? I think there is none. So we stop at that point for now. Have a nice evening. So we continue from there next week. See you next week on Tuesday.
Are you preparing for the upcoming CASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive CASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0745155. Focus Online College, your passing CASNEB exam. Are you preparing for the examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. College invites you to join our intensive CASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 94511. Focus Online College, your passing KASNEB exam. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0719451155. Focus Online College, your trusted partner in passing examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 07511155. Focus Online College, your trusted partner in passing KASNEB exam. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0719451155. Focus Online College, your trusted partner in passing KASNEB examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 071155. Focus Online College, your trusted partner in examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 071155. Focus Online College, your trusted partner in passing KASNEB exam. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0751155. Focus Online College, your trusted partner in passing KASNEB exam. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0751155. Focus Online College, your trusted partner in passing KASNEB examination. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0751155. Focus Online College, your trusted partner in passing examinations. Are you preparing for KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0711155. Focus Online College, your trusted partner in passing examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0751155. Focus Online College, your trusted partner in passing examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive KASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0745155. Focus Online College, your trusted partner in KASNEB examinations. Are you preparing for the upcoming KASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive CASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0711155. Focus Online College, your trusted partner in passing CASNEB exams. Are you preparing for the upcoming CASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus invites you to join our intensive CASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0719455. Focus Online College, your trusted partner in passing examinations. Are you preparing for the upcoming CASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive CASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0751155. Focus Online College, your trusted partner in passing CASNEB examinations. Are you preparing for the upcoming CASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence. Focus Online College invites you to join our intensive CASNEB block revision classes, running from the 23rd of March 2026 to the 18th of April 2026. This focused online revision program is designed to help you revise key examinable topics, strengthen your concepts and understanding, and build the confidence you need to succeed in your exams. We offer a simple and affordable fee structure. Block revision only. CPA, ATD, CS, CIFA, 2,000 Kenyan shillings per unit. BDA, 2,500 Kenyan shillings. Block revision plus access to previous class videos. CPA, ATD, CS, CIFA, 2,500 Kenyan shillings per unit. BDA, 3,000 Kenyan shillings. Take advantage of this opportunity and secure your place today. Call or WhatsApp 0719451155. Focus Online College, your trusted partner in passing CASNEB examinations. Are you preparing for the upcoming CASNEB examinations? Now is the perfect time to revise smarter, strengthen your understanding, and pass with confidence.
Dorcas, good. Dorcas, I think we can just start for the sake of time. Our colleagues will join us. It's now 6:10, so I think for the sake of time, allow us to start. So confirm if you can see the notes on the screen. Confirm if you're able to see our notes in the screen. Yes, thank you very much, Dorcas, for the confirmation. So we want to start with this paper. I believe these questions are with you. So now onwards, we are starting on serious revision to cover as much papers as possible to ensure that when you go for the exams, you have enough knowledge and confidence to face the exam. So we want to start with this paper on April 2023. I will also share the most recent papers. I'll share them as times go by. So let's start on question 1, which has enumerates. So I'll be highlighting the answers as we proceed. Just a minute. So the first question. First question is, enumerate 5 characteristics of transactional leadership style. If you look at the past paper, if you look at the notes, there's a topic that we talk about leading as a management function. And in that topic of leading, we were able to talk about different leadership style. We talked about democratic, laissez-faire, autocratic, or then what? We talk about even transformational and then transactional. So this question is very specific on one. He wants you to talk about the features or as a work of what's called transactional leadership style. Now, the first feature of this style is talk about contingent reward system. So transactional leadership motivates subordinates by offering rewards for performance. Basically, with this kind of leadership, you are rewarded subject to how you perform. Employees receive benefits or recognition only when they meet predefined goals or tasks. So with this style of leadership, if you don't meet the predefined goals or tasks, then basically you don't get any rewards. That's why we call it what? We call it transaction. Basically, tell us what have you done, and then basically from that you can be able to what? Be given. So reward is based on your ability to what? To meet the predefined. Predefined means what? Before you do the work, you agree that you're supposed to what? Meet this target. Then number two is clear structure and expectations. Clear structure and expectations. So we say that this leadership style operates with well-defined roles, responsibilities, and expectations. So in this, if you are going to lead using transactional leadership style, then basically you must be ready to be able to what? Have a clear structure and also expectations. So everybody should know their roles, their responsibilities, and what is as well of them. Leaders ensure subordinates know what is. So with this kind of leadership style, basically, each and every employee should be given what is expected of them. How are they expected to what? Achieve. So basically, expectations by the management is determined. Then number 3 is management by exception, what's called active management. So leaders actively monitor the performance of employees and take corrective actions when deviations from standards occur. So this kind of leaders are very alert. Anytime you deviate from what has been what has been expected or what is expected, then basically they try to what? They try as much as possible to ensure that what? So they monitor. Basically, it's an aspect of micromanagement. They monitor actively what you're doing so that what? They're able to ensure that what? In case you're deviating, they correct you. Number 4 is what? Short-term focus. So with this kind of leadership style, basically, the leaders of the company have what you call what? A short-term focus. So transactional leaders are more concerned with maintaining the status quo. Means what? They want to maintain how things are being done now and achieving short-term goals rather than what? Long-term, innovative, or visual. So if you're applying transactional leadership style, know that that is a short-term leadership style. It cannot take you for long. If you want to go for long, then you can go for what? It's called what? Transformational leadership style. The number 5 is what? Directive leadership. So leaders give specific instructions and actively supervise subordinates, relying on command and control approach. So with this kind of leadership style, expect a lot of what? Close vision. And sometimes it may even look like what? They're micromanaging you. So they supervise you well. Then they rely on what? On command and control approach. Means you're told what to do and then you do it. So this is a little bit of mechanistic. Means what? They look at people like machines. So whatever you're told to do, you do it the way you're told to do. That is on the first question. Now the second question, or the question 2. Question 2B, if you look at these past papers, you realize that I'm starting with the question 2. Question 1 is basically what's called question 1 is a case study question. So we want to go look at these others. Then we'll have a day when we dwell on case studies. You can do 2 or 3 case studies. So if you're able to do that, then basically we'll be comfortable. So we'll be doing from number 2 onwards for the other question. But then there's a day that will come here. And all we'll be discussing will be case study. We'll discuss only case study. That's why you see me leaving them out. Now, 2B is asking, explain 5 challenges associated with what? Delegation of duties. we say that one of the activities or duties of, one of the major activities done by the management is what? Delegation. Delegation basically means what? Giving your subordinates some of the tasks to do. That is what's called delegation. So if you delegate means what? You're giving a subordinate some task to do on your behalf. That's what delegation means. Now let's look at some of the challenges with delegation. Why some people may not want to delegate. Let's look at some of the challenges of delegation. Number one is what? Lack of trust in subordinates. So sometimes as a manager, you may not want to delegate various activities to certain individuals because of something called what? Lack of trust. If you fear that they're not going to perform the way you expect, then basically you will not delegate. So sometimes we fail to delegate because we feel like what? Managements or those subordinates are not able to do the work that we expect. Because we say that you can delegate responsibility, you can delegate tasks, you can delegate power, but you can never delegate responsibility. That's what happened. So that's why you must ensure that the person you're giving that task must be. So sometimes managers fail to delegate because of what? They don't trust subordinates to do the work the way they expect. Number two is poor communication. So misunderstanding may arise if instructions are unclear or if feedback mechanisms are inadequate, resulting in what? Poor performance. So if you're delegating a task from me, you must give me clear instruction. What do you expect me to do? Don't just delegate and give me a clear instruction that what this is what I want you to do so that I don't go overboard or I don't underperform. Let me know that you are delegating this work and this is what you expect me to do. So in delegating also, there must be what? There must be good communication. You must communicate what you expect me to achieve or what you may want me to achieve. So delegation comes with what? Comes with an aspect of what? An aspect of good. So if you know you're poor in communication, then better you don't delegate, because if you delegate, you may end up giving wrong instructions, and that can lead to what? Poor performance. Number three is what? In what's called insufficient training. Very true. If subordinates or the employees lack the required skills to undertake a task, then basically you'll find it difficult to delegate. So you only delegate if employees have been trained on what you want them to do. Don't delegate a task that you have not been able to what? Don't delegate a task that employees don't know. Delegate what employees understand. So if you want to delegate what employees expect what? Or expect you to do. So talk about what? Insufficient. Then fear of losing control or authority. This is also another important aspect we look at in delegation. When we talk about poor or fear of losing control or authority, there are some managers that want to believe that they're the only people in that company who are suitable enough to do those tasks. Some of them believe that if, for example, I give a subordinate task and then they do it better than me, then I'll not look like I'm powerful. So some of them don't delegate to maintain power. So some of them want to be in authority, so that what? If I start delegating work, then they may look at me like what? I'm not in authority, or they may feel like what I can do, they can do. So they don't delegate because what? They want to maintain the authority. Number 5 is what? Unclear objectives. So delegation without clear defined goals and can lead to what? Confusion, duplication, effort, lack. So basically, if you don't give clear objective, if you don't have clear objective, then basically delegation can be very challenging. So that is another reasons why another challenge that organizations faced in relation to what? Delegation. Another challenge that organizations faced in relation to what? In relation to delegation. Very, very important to understand that concept. I think that is done. Then we go to the next question here. C part of question 2. Let me scroll down. The C part, okay, what's happening? What has just happened? Okay, the C part of the question is asking. Just a minute, let me just correct it. Okay, the C part of the question is asking, so that suggest 5 demerits. Demerits means disadvantage. We talk about demerits. We can also call demerits are also called disadvantages. So suggest 5 demerits or disadvantages. Demerits are also referred to as suggest 5 demerits of charismatic leadership in an organization. So charisma. These are basically people these are leaders that individuals want to copy what they're doing. So they're called charismatic leadership. Now the question is asking, explain or suggest 5 demerits of charismatic leaderships in non-organization. So we talked about different leadership style, and charismatic was one of them. Number one is the first demerit is what? Dependency on the leader. So if you have a charismatic leader, you depend on them on almost every aspect. So that employees may become overly reliant on the leader, reducing their ability to act independently or manage. Means what? Whatever you want to do, you want the leader to be involved, or you want to copy what they're doing. So basically, you don't become independent. You become like you want to follow what they're saying. You want to talk how they're talking. So basically, there's what's called over-dependency. You may over-depend on them until you cannot know what? You cannot use your own brain, or you cannot what? You cannot be innovative. You want to do things the way they are doing. Number two is lack of succession planning. So the organizations may struggle if the charismatic leader leaves, as their unique influence and vision may be difficult to replicate. So if you depend so much on a charismatic leader, then you can have what's called what? Lack of succession. You may depend. If a day reaches when this leader leaves, whether he leaves voluntarily or is forced to leave or involuntarily, basically, you may have what? A problem in getting the same leader with the same quality that what the charismatic leader had. Number three is potential for manipulation. This leader, because you know that is influential and you people rely on them, they can start being manipulative. So that a charismatic leader can exploit their influence to push personal agenda that may not align with what. So basically, because they know that you depend on them, you want to be like them. So basically, they can use that charisma to push their personal agenda as opposed to what the company's agenda. And then number four is overemphasis on personality. Basically, if you look at charismatic leader, basically, it depends on personality, not basically any other aspect. So decisions may be based on the leader's personality rather than what? Data, collaboration, or best practice. So because you want to follow this charismatic leader. So whatever they say will prevail. But sometimes they may use their own thinking as opposed to data. So they may make decisions which are not scientific. And then number five is what? Resistance to criticism. So charismatic leader may resist feedback or dissent into what? Autocratic tendency or poor decision making. So some of these leaders, they know that you consider them very charismatic. So what they do, if you come up with a given opinion, they resist. If you talk something negative about them, they will want what? They want to resist. And that can lead to what? A very big problem. So talk about what? Resistance to, some of them may not want what? To be criticized. So we talk about what? Resistance to criticism. So that is another challenge. So on number two, are we clear or there's something I need to explain further? On number two, are we good? On charismatic leader, are we good? Hello? On question number two, can see Dorcas Sheila Ondieki. Are we good on topic two? I know you've arrived a little bit late, but I believe you've been able to get something. So I believe that question is well understood. Now, under question 3, I want us to look at question 3. Now, question 3 is asking, Question 3 is asking, question 3A, basically. We're talking about question 3A. Now, question 3A is asking, explain 4 triggers of change in an organization. Now, these are how exams are done, are asked, or exams are set. They talk about triggers. So they know that you understand the word causes. So they come with what's called what? Trigger. So if you don't know that trigger and causes are the same, you may end up saying that this question is difficult. So basically, when we talk about triggers, a trigger is just a cause. What causes a change? That's basically what we call a trigger. So what they are asking here is basically, they're just asking you, what are some of the what? What are some of the causes of change in the company? The first one is technological advancement. You know that if technology advances, the company to what? Also adopt the technology. And adopting it may be what? It may cause a change. So that the emergencies of new technologies may force the organization to what? Change systems, process, or product design. So basically, if technology change also, you'll be required to change. Number 2 is market competition. Very serious. If there's competition in the market, then you have to change things to be able to what? Match the competition. So increased competition or new entrants in the market may trigger strategic changes to remain relevant and profitable. If there's too much competition, you must come up with a new strategy. And that new strategy may change how things are done in the company. Number 3 is legislative or regulatory changes. When the law changes, when the law of the land changes, when there's change in regulations of a company, for example, when the government comes with what's called what? Minimum wage, and you need to implement, basically, that must change how you use your funds. So basically, new laws in the industry, new laws or industry regulations can compel organizations what? Adjust operations or policies to make what? For plan. So if the new law in the industry, then you'll be required to what? To change that what? You're able to comply with the new law. Then number 4 is changing customer preferences. With you, we see we produce goods for the customer. If the customer preference change, then we have to change to ensure that what we provide what they now prefer. So that shift in consumer tastes and expectations often require business to innovate or improve their service or product. So basically, when there's a shift in consumer tastes, when the consumer taste changes, then basically you'll be able to what? You'll be able to basically change to ensure that what? Your products are also able to match their new requirements. That is very, very important. Now, the next question here, number 2B, asking, describe 5 shortcomings of Abraham Maslow theory of motivation. Now, if you remember, when we talk about theories of motivation, we talked about Abraham Maslow. We talked about Abraham Maslow. And Abraham Maslow came up with called Abraham Maslow hierarchy of needs. So according to Abraham Maslow, see that human needs are categorized from the basic or what's called physiological needs to self-actualization needs. So the basic are called physiological go up to what? What's called self-actualization. That is what Abraham Maslow talked about. Now let's look at some of the shortcomings. Some people that don't support this theory, they have their own reason. So those reasons are what's called what? Shortcomings. So the people that don't trust this theory, now their reasons are what we call what? The shortcomings of this theory. What are some of the shortcomings of this theory? Number 1 is lack of empirical evidence. That means this theory, you cannot get an evidence that is able to support it. Means you can never get research which has been done by other person to support this theory. So basically, we talk about what? Lack of empirical evidence. So that Maslow is difficult to test scientifically. Means what? This kind of theory is difficult to test scientifically, as human needs are not always easily measurable or observable. You cannot observe human beings, and it also is very difficult to what? To measure human beings. So that makes what? Makes a little bit challenging. Number 2, needs do not follow a fixed order. So according to Abraham Maslow, human needs follow a particular order from basic needs, which are also called physiological needs, to the higher needs, which are called what? Self-actualization. So according to Abraham Maslow, human needs are ranked. But in real sense, if you look at human needs are not ranked. Some of them are random. So this person said that what? Human needs are ranked, but in real sense, human needs sometimes cannot be ranked. Some human needs are, some human needs even what? Even come in, Molinga, how are you? Molinga, welcome. Yes, then the next limitation is what's called cultural limitations. So this theory by Abraham Maslow is based on Western individualist values, Western individualistic values, and may not apply to collective cultures where group needs are prioritized. So basically, what happens in this case here, or what happens in this case, Molinga, you can switch off the video. Okay. So we talk about cultural limitations. So the theory is based on Western individuals' values and may not apply to collectivism cultures where group needs are prioritized. So what does that mean? What does this mean? It means that this theory was made based on the Western culture. If you come to Africa, whereby, for example, we have, I think some of us are feeling uncomfortable with the video, but I think I've talked to him. He'll be able to, let me see if I'm able to stop the video. Would have been able to switch off the video from the side. I think we are good now. Sheila, are we okay? Are we good now, the class? Are we good? Thank you. Now, we talk about cultural limitations, basically. In some, this theory basically was made from the Western culture. Western culture. So if you come to African culture, whereby we have a lot of collectivism, then basically this theory may not apply. And then another disadvantage, another challenge of this theory is what we call oversimplification. That this theory oversimplify things. Just as that what theories can be or needs can be ranked. So basically, this theory makes even complex matter look like they're very simple, but which may not be the case. So that human motivation is complex and cannot always be what neatly categorized into 5 levels. So these guys believe that what you can just wake up and categorize human needs. So, but in real sense, you say that what human needs are human motivation is very complex, which you cannot just wake up and what and start basically making them simple that you can just categorize them. So that's another challenge. So the people that also say that tell him that what this is a challenge, then ignores situational factors. Ignores situational factors. So that the theory fails to consider motivation can be vary based on circumstances, emotions, or specific environment. Now, when this theory talks about a simple, I want to look at a simple extraction, a simple illustration. This theory talks about that these human needs can be ranked from the basic all the way to the more complex one. Now the question is, there are times or there are circumstances when, or the circumstances where we have what we call you see, this theory categorizes needs from what? The basic all the way up. But sometimes somebody may satisfy a social need before satisfying what? A security need. So basically, we talk about what aspects. So it's ignored. So the theory fails to consider motivation can vary based on circumstance. So what motivates you can vary based on what? The circumstance you are in. Emotions can also, your emotions can determine what you need. So basically, that is the area that this theory may sometimes fail us, or this theory may not be able to explain to us well. So that is another aspect you need to look at, another challenge for this theory. That's another challenge for the theory that you're learning. Then we go to number 2C. Question number 2C. Question number 2C asks, or it asks, outline 6 ways in which a business, outline 6 ways in which a business, outline 6 ways in which a business could use macro. We have what's called micro and macro. Now, in this case, they want us to narrow down to macro, not micro, but macro. Outline 6 ways in which a business person could use a macro environment to its advantage. How can you use these macro environmental factors? And macro are basically external factors. Talk about the pestle factors. How can you use them for your advantage? That is what that question is asking in short. How can you utilize them to your advantage? Sorry. Now, the first one is adopting to technological trends. Adopting to technological trends. What do I mean? You see, if you look at the pestle factors, they're basically external or macro environment factors. So when you talk about adopting to technological factor, means what? We are talking about what? Technology, which is what? A macro environmental factor. So embracing new technology, e.g. AI, automation to improve efficiency, reduce costs, or enhance customer experience. So you can be able to what? Adopting technology. So basically means what? If there's a new technology in the market, you can adopt it to ensure that what? You become competitive in the market. Number 2 is leveraging economic trends. So this is what? This is an economic factor. The first one is technological trend, which is what? Technological factor. Now, say that leveraging economic trends, that is now what? An economic factor, which is still part of pestle. I don't know if you're seeing how we are moving. Now, what do you mean? In this case, say that capitalizing, you say, capitalizing on favorable economic conditions like low interest rates or economic growth to expand operations. For example, if government comes up with a good condition like, for example, low interest rates. So you see, when you talk about low interest rates has a relation with what? With borrowing. If the central bank directs commercial banks to give loan at a low interest rate, the consequence is that all of us may want to go and borrow money. When you borrow money, we're able to what? Venture into various economic activities. So that's what we're talking about, number 2. Then number 3 is what? Responding to political stability. P in pestle, talk about political factor. So basically, this number 3 talks about what? The political environment or the political factor. So we say that operating in politically stable countries can reduce risk and provide a conducive environment. Nobody wants to do business in a country which is politically unstable. So that's why if you're doing a business, you must look for a country which is economically stable to ensure that what? Your business can succeed. You can never do business in a country which is what? Economic unstable. And that is a fact that if you want to do business, look for a politically stable country so that you don't have issues of looting and other negative aspects or negative impact don't befall you. So we talk about what? We talk about political stability. Then number 4 is what? Compliance with the legal requirements. So pestle, the last letter of the pestle is L, which is what? Legal factor. So that proactively adhering to regulations can improve corporate image of the company, avoid penalties, and build stakeholder trust. Means what? You need, if there's a change in law or regulation that affects operation in that industry, ensure that what? You embrace it. Number 5, environmental sustainability initiative. This is basically what's called the PESTEL, ecological or environmental factors. Talk about the ecology, the environment now. So you need to embrace. For example, NEMA can come up with a regulation that all companies should find a way of disposing the waste product in a proper manner. So basically, if that rule comes, then basically you need to follow up. So using ecological concerns as an opportunity to adopt green practices that attract eco-conscious consumers and investors. So this one is what's happening now. We call it green practices. You ensure that whatever you do, you try to make our environment better. That's where the name green comes from. And then last one is demographic awareness. Anytime you hear about the word demography is the study of population. Demography is basically what? The study of population. So understanding, you need to understanding demographic trends. Talk about changes in the demography or changes in what? The population, e.g. aging population. Whatever you're supplying, which population do you target? Is it the aging population? Is it the youth? So ensure that what? You understand the demography of the market so that what? You are able to bring goods or services that are able to what? Are able to be consumed by the demography that you want to take. So you can segment the market tabs photo, what's called demographic segmentation. Now, are we good in number 3? Is number 3 well discussed? Is number 3 well discussed? Or is somebody with a question on how we have been able to tackle number 3? Is it okay? Number 3? Dieki has responded, says okay. Steve said it's okay. Sheila said it's okay. So I believe that number 3 has been done very well. Now, number 4, in this question is asking, examine 5 aspects of Mary Parker Fallett's management theory. We also look at this theory. Now, one thing you need to realize in this kind of exams, there are areas that don't miss in exam. And one of them is the theories. Theories will not miss. One of those theories must come, not will come. But one of the theories there must come. Lazima itakuja. So when you're reading the theories, read them very carefully, because knowing that each or any of those theories will come. Some of those theories will come. So if you're reading them, I would urge you to read them very carefully, because I know they normally bring theory. So a theory will come. Now, like you see, we have talked about Abraham Maslow up there. That's a theory of motivation. But now we are talking about what? Mary Parker Follett theory here. Now let's look at examine 5 aspects of Mary Parker Follett's management theory. So this theory, so we first introduce it and say that Mary Parker Follett was a pioneering management thinker. So these are very good. We call them management gurus. Those people who sat down and developed these theories, we call them thinkers, or we can call them gurus. So that this is a management thinker whose ideas emphasize human relations. So it dwells so much in his discussion. It dwells so much on human relations. Group dynamics. It talked about how can you be able to manage human beings in terms of groups, and participatory management. Mary Follett was an individual who supported what's called participatory leadership, whereby he said that if you want to manage people well, or if you want the company to move ahead, ensure that you also include the employees in leadership. Means let them participate in every aspect of leadership, ask them questions, let them give suggestion, and that one will help a company move ahead. So that's what. Now let's look at the key aspect of her theory. Let's look at the key aspects that Mary Parker Follett came up. So the 5 key aspects of Mary Parker Follett theory are these ones. Let me highlight them in a different color. The first one is power with, not power over. So Mary Parker Follett was saying that what? If you want to manage people, use what's called power with, not power over. Don't be somebody who wants to have power over people. So Follett advocated for what? Shared power and collaboration rather than what? Hierarchical control. She believed leaders should work with subordinates, encouraging mutual respect and joint problem solving. So he was someone who said that what? Don't be too bossy. If you want to lead people well, then be at their level, discuss them. So what's called power with, not power over. Number two is integration of interest. So Mary Parker Follett also said that what? If you're managing people, integrate individual or employee's interest with the company's interest. So in an employee trying to help the company achieve its objective, an employee should also achieve their individual objectives. That's what? It becomes a win-win situation. Me as an employee have achieved my objective, and then the company has also what? Achieved their objective. So that's what? She emphasized resolving conflict through integration, finding a win-win solution rather than compromise or domination. This meant in identifying common interest among parties to achieve unity, to ensure that what? As the company is achieving its objective, individual objectives should also be achieved. Then she also had this aspect, or the third aspect that she looked at is on what we call the law of the situation. Say that what? Handle each situation differently. There's no universal way of what? Handling a problem. So if a problem comes, handle it in your own way, the way you understand it, based on your skill. So that what? According to Follett, decision should be based on the specific situation, not on personal authority. Don't use your power. Just look at the situation. What? Fine. Then the right course of action should be dictated by the what? The needs of the situation, rather than what? Rigid rules. So you see that what? Don't apply rules so much. Look at the situation and look at how can we solve it. So we should solve situation. We don't look at the hierarchy before solving a situation. Another aspect of Mary Parker Follett, number 4 here, is what's called group participation and teamwork. So if Follett also said that what? We need to work as a team. We need to work as a group. So Follett emphasized democratic leadership and the importance of what? Group discussion. Say that what? If there's an issue that needs to be looked into, let us look at it as a group, not as individual. So she believes organizations function best when employees are actively involved. When you talk about when you talk as a group, basically means what? We're involving employees in what? Decision making. Then the fifth element here, talk about leadership as a function of a group. Say that what? Leadership should not be a function of individual, should be a function of the group. So she proposed that leadership should emerge from the group, not just from formal title. Leaders should be facilitators, helping the group achieve its goals through coordination and cooperation. So we talk about what? Helping the group what? Achieve its goal through coordination and cooperation. So leaders should coordinate with the group or should cooperate with the group. So basically, that was some of the aspect of Mary Parker Follett in relation to what? Management. Are we together? Now, the B part of that question is asking, the B part of the question is asking, discuss 5 elements of marketing mix. Now, we have gone to marketing. Because if you look at the syllabus, there's a topic that was talking purely about marketing. And was most, I think the second last topic was dwelling so much on marketing. Now, the question here is, the marketing mix community that was the 4 P's expanded to 5 or 7 P's in service industries is a set of tools used by marketers to pursue their marketing objectives. The 5 key elements include, so we talk about what? The key elements of marketing. Number 1 is the product. You can never market a good without having a product. We market the product basically. So if you don't have the product, how do you market? So market is only possible when you have the product. So refers to the goods or service offered to meet customer needs and wants. That's what we call what? A product. It includes features of that product, quality, design, branding, and warranty. The product must deliver value and solve the problem or fulfill desire. Why do we buy goods and services? We buy them because what? They help to meet our needs. We buy things because of the needs. So if whatever you're selling to me is not able to meet and exceed my need, then basically, why should I acquire it? So basically, if you want to do business, ask yourself, whatever you are offering with a good or service, is it something that help in solving or help in meeting or exceeding the needs? If you're selling what's able to meet people's needs, then basically you'll sell because people require them. Number two is the price. You can never sell a product or market a product without having information about the price. So price, the amount of is the amount a customer pay for a product. Price strategies, penetration, scheming, value-based must consider cost, competition, perceived value, and customer willingness to pay. So price plays an important. Price will determine whether you'll attract more customers. Price will also determine your profitability as a company. So price is very important. Now, then number three is distribution. When you're marketing product, basically, you're creating awareness. Oh, we have this product in the market. When you're advertising a product on TV, on Facebook, on social media, on national newspapers, basically, customers see them all over. So you may have a customer in Wajir who wants that product. How do you distribute them? So place basically means distribution. So that the concerns this concerns location and channels through which product is made available to customer. It involves logistics, supply chain management, distribution strategies, and what? Direct, indirect, and retailing. So basically, this one is very important. This one is a very, very important aspect. We need to look at it and look at it very carefully. In that, for us to be able to reach our customer, we must have what is referred to as, or we must consider what is referred to as what? Distribution. Don't just create demand. Also, try to confirm, are you able to ensure that these goods are able to reach the customer? So it's not about just saying I have this product. The question is, can you be able to ensure that that product reaches the consumer? Very, very important. Then number four is promotion. Very important, promotion. So refers to communication strategies used to inform, persuade, or remind customers about the product. You cannot market without promotion, including advertising, personal selling, sales promotion, public relations, and digital marketing. Basically, you must use those avenues to promote a product. And then the last one is what? People. You must have qualified personnel that are able to convince the customers, but by explaining how important that product is or that service is. So particularly important service in service marketing, this is about what? Employees and customers who interact in the service industry. The training, appearance, and behavior of staff influence customer satisfaction and brand perception. So how you treat your customer determines whether they are going to come back to buy from your company or not. So the customer perception of your employees will determine how they are. There are people that don't eat in hotels because of the customer service they found. The hotel may be having the best meals or the best food, but now, because of the way the customer service or they were treated, they don't want to learn. So that's why we must also look at the quality of the human resource as a what? As one of the marketing mix. Yeah, these are the P's, yes. We call them the P's. The P's are the marketing mix, basically. They're the P's. Steve, they're the P's. Good. Now, we want to take a small break. A break of 10 minutes. You can take a glass of water. Let's take a break, and then let's meet here at exactly 7:10. Take a small break. Take a glass of water. Then we come at 7:10. We're back here and proceed. Thank you. Let's take a small break. Is that okay? Are we in agreement? We have a small break? Good. So let's meet here at exactly 6:10. Let's have a glass of water. Those who are maybe having a glass of water can have a glass of water. Then you can come back strong. So let's have that break. Can you confirm if you're back? The break is over. It was a 10 minutes break. The break is done. Can you please confirm if you're back? We're done with the break. Now let's proceed. Confirm if you're back. You're back. I can see Remolinga is back. Ondieki is back. Who else? I'm taking the roll call. Steve is back. Where are the ladies? Sheila is back. Any other person? There's who else? Steve, Sheila. I think we're back. Dorcas, good. I see Dorcas is also back. So I think we are full house now. We can proceed. Thank you very much for cooperation. Now, question number 5 is asking, question number 5A said that examine 5 benefits of the contingency theory of leadership to an organization. Now you see, we are meeting the third theory. Since we started doing this paper, this is the third theory. That means at least 15 marks. This one's almost 20 marks. So from the theories only, you can see this is the third theory of meeting. So when you're reading that topic of theory, be very careful, because I can assure you, even this time round, a question will come from that fourth theory. So when you're reading the theories, read between the lines. Be a little bit cautious. Read. I'm not saying that other parts are not good. Other parts are good, but basically, theories are also are part of the syllabus. So try to read between the lines so that we're able to what? We're able to score highly. Our objective is basically to ensure that everybody scores very good marks. That's why we talk about that theory. Just a minute. Just a minute, please. Let's confirm something here. Good. So let's proceed. So that examine 5 benefits of a contingency theory of leadership to an organization. So that contingency theory, we start, let's give an idea of what it is. So contingency theory suggests that there is no single best way to lead. Leadership effectiveness depends on the context, basically. So they're saying that what? There's no one fits all leadership style. You cannot say that this is how I want to lead. Basically, leadership is what's called situational. How you lead depends on the prevailing situation. So this guy or this theory says that there's no one way to lead. How you lead depends on the situation. That is how this theory is made. Now, that the benefit of situational leadership theory is number 1, situational stability or flexibility. Means you can be able to shift how you lead based on the prevailing situation. So that encourages leaders to adopt their style based on the situation, team, and task, making leadership more effective in diverse environment. Means what? You don't have a standard way of leading. Your leadership style or how you apply your leadership style will be subject to the situation you're facing on the ground. Number 2 is improved decision making. So if you look at a situation before you decide, then basically you'll make more relevant decision based on the situation, not based on what the leadership style says. So that leaders can make better decisions by considering external and internal factors such as what? Team maturity, complexity of task, and urgency. So basically, you'll be able to make a good decision if you look at the situation you are in. So different situations require different decisions. So that's what that point says. Number 3 is enhanced employee performance. That when leadership style matches the situation, employee motivation and performance often improve, leading to what? Better outcome. So if you match how you lead with the situation you're facing, then basically you can optimize, or you can what? Employee motivation and performance improve. If you are able to handle a situation or to handle an issue based on the situation, you will never have conflicts. You'll be able to what? Sort out issues as and when they come. So there will be nothing like what? You don't become rigid leader. You say that what? What's the situation? Then you can be able to what? You can be able to like suggest a better way to solve the problem. So those are some of those, some of the features of or benefits of what? What's called situational leadership style, which say that what? Or contingency leadership, it can be called contingency or what? Situation means what? There's no single way. You cannot use the same resource, same technique to solve all problems. All problems are unique, so you need to ensure that what? You have a unique way of what? Solving those problems. Now, the B part of this question, 5B, is asks, let me highlight. Assess 5 benefits of proper planning in an organization. So this one comes from one of the basic management function, which is planning. So this question comes from the planning function, one of the management functions which we call planning. Now, why do we plan? What are the benefits of planning? Why do we plan as a company? Or what are the benefits of planning for the company? Number one is provide direction. If you plan, basically, you know what you want to achieve. So basically, it gives you a sense of direction. You know that these are the goals, these are the objectives. So whatever you do to ensure that what you achieve those goals and objectives. That's number one. Number two is reduces uncertainty. They say that what? If you plan to fail, or if you fail to plan, you're planning to fail. In the planning phase of management of the company, you even try to predict or to focus some of the risks you're likely to face, and you prepare for them. So during the planning phase, you even know that these are some of the risks I'm likely to face, and these are the measures I put in place to be able to what? Handle those risks. So basically, you're able to ensure that what? To reduce what? Uncertainty. Because what? In planning also, you are supposed to identify what are the potential risks that are going to face, and then put measures to, so that if any of the risks come, it doesn't find you unaware. At least you had planned for it. Number three is improves resource allocation. There's something called resources. From the economic perspective, or from the knowledge of economics, you see that what? Resources are basically scarce. Economics say that what? Resources are scarce. And because they are scarce, you have to make a choice. And this choice means you have to decide which area do I use resources in to ensure that what? I'm able to optimize my operation irrespective of the scarcity of these resources. So we say that improve planning, resource, human, financial, physical, allocated efficiency to what? High priority risk tasks, avoiding wastage. So you put more resource in high priority tasks and reduce some in what? Low priority tasks. Then number 4 is enhance coordination and teamwork. Very true. With the planning, you coordinate, because in the planning, basically, you are able to come up with departments. For example, a company, when you see departments in a company, those departments were created through what's called planning. These people who have done accounting, let them in the accounting department. These guys who have done procurement department. These guys who have done production, engineers, let them know. So basically, in planning, you're able to ensure that what? There's coordination. You can allocate people in different departments, but all of them should work to ensure that what? We achieve or what? The same object, or we achieve what? We achieve a common objective. Very, very important that you look at that aspect very well. Then the last one is what? Facilitates control and monitoring. With a good plan, basically, you can control how activities are supposed to go in the company and ensure that what? You monitor. Because in planning also, you even give people tasks and a task and responsibility. And then you tell them the expectation. So you're able to monitor to find out, were they able to achieve what was set for them to achieve? So that's why planning becomes very handy. So basically, those are what? Those are some of the, what we call benefits of proper planning in the company. That question 5, is it clear? The 2 questions in question 5, are they clear? I'm waiting for your response. Confirm. If there's a question you want to ask, then I can dispose the question before we proceed. Sheila said that the question is clear. Undieki is okay. I'm waiting for you. You know, in revision, I don't need to move very fast. I need to confirm first. If all of you have understood the concept, then you can move ahead. We are revising now. So here, I expect everybody to be engaged so that in case there's something you need me to repeat, I repeat. At the revision level, we ensure that we cover, or we ensure that you understand. So if there's a question, or there's a question that I've passed and you don't understand it, then you can let me know so that what I can relook at it. But I've seen all of you have said we are good, so I can proceed. I can now confidently proceed to the next question because all of you have given me an okay. Now we go to August 2023 paper. This was the paper that those who sat for exams in August 2023 did. And I said, for those who did not come here for the first time, I said that we are doing this paper from question number 2. Reason being, question number 1 is what we call the case study questions. What I normally do is that we will dedicate a day just for handling case studies. So allow me to do question 2 onwards, but then we'll have a day when you come to class and we'll take the 2 hours. It can even take 4 hours. You can even take 2 classes to ensure that what we look at the case study and understand them. So it's better we set a day where we only deal with what? With the case studies. It makes it easier for us to understand. And I'll even give you one you test yourself with, and then you submit, and then we see how you answer. Now, let's look at this question, this August 2023 question. Now, the first question is summarize. Now, there's something that I'll also do. I'll get you these terms. We call them, how do you call them? I'll get you these terms. When an exam asks explain, what is expected of you? When they ask summarize, when they ask you to list, when they ask you to elaborate, illustrate, what do those terms mean? Because sometimes we don't know what is expected of us. So I'm going to get you that definition of examination terms. I'm going to get as much as possible and share so that you see, you'll be reading when you're asked to list what is expected of you, when you're asked to explain what. So basically, I'll share those terms. We call them examination terms that I use. So basically, I'll share them so that when you ask to elaborate, explain, determine what is the expectation. Because sometimes we may assume those terms, and then you end up doing a question, kumbe, you don't get maximum mark because what? You didn't understand. So those terms, I'll share them in the course of the week. I'll be able to share them. In case I forget, please remind me, but I believe I want to remember to. So this term is asking summarize 5 approaches in project management. What are the approaches in project management? Number 1 is called waterfall approach. When we talk about waterfall approach in project management, what do we mean? So let me highlight these answers, then I can be able to discuss them one by one, but you understand. Now, when we talk about waterfall approach, so this is a linear and sequential. Linear means straight line. A linear and sequential project management method where each phase we talked about the project life cycle from initiation, planning, execution, and closure must be completed before the next begins. Best suited for projects with clear, fixed requirements. So according to this waterfall approach means what? We must finish one stage before moving to what? Another. So we must clear with initiation, then move to planning, execution, and closure. Means what? We must follow that line. You can never mix any of them. That's what this approach says. Now, the second approach is called agile. Agile means flexibility. When you talk about agility, agility is an aspect of being flexible. Now, so that this is an iterative and flexible approach, emphasizing collaboration, customer feedback, and small, rapid releases suitable for dynamic projects, especially in software development where requirements evolve. Agile means what? You don't become, in fact, agile is like an opposite of what? Of waterfall. Waterfall means you have to follow. But now with this one, you're not doing a project in a perfect environment. There are things that can change in the environment, and those things that are changing in the environment, some of them can affect execution of the project. So with this agile approach, you are flexible. If there's a change that comes that you think is good for the project, then you adopt it. If there's something that comes that you think is bad for the project, but basically you do that in consultation with what? With the project stakeholders, you don't do it single-handedly. Then the third approach is called critical path method. You look at the main part of, for example, if you're building a house, there's what's called major parts: foundation, the walls, the roofing. That's called the major parts of the project. So, you know what? Focus on identifying the longest path of independent tasks and managing critical activities that determine the project duration. So, there are things that determine how fast you finish a project. So, those ones you dwell on them. Useful for scheduling and resource allocation. So, we're using critical path. You can know, for example, what comes first, then you allocate resource. You first ensure that what? You allocate resource to what? The critical part, critical aspect, or what is critical part. This means what? Major part of the project. So you allocate money or resources to what? Major parts of the project before allocating to what? Other parts. That's basically when what critical path analysis comes up with. Then number 4 is also the Prince2. Prince2, just a minute. So we have the Prince2, another what's called approach of project management is called Prince2. How does it work? When we talk about Prince2, how is it applied, or how does it work? Now, so that Prince2 means project in control environment. So Prince2 is basically the name that's given. So a process-driven project management methodology emphasizing defined roles, each and every project team given a role, structured stages. There's a structure on how you're supposed to do the project in terms of, so the stages of the project are well structured on how you're supposed to go about it, structured stages. Talk about product-based planning. You plan based on the product you want to achieve. Widely used in a public sector and complex projects. So in complex projects, go for the what's called the Prince2, which is more project in control environment, whereby you ensure that you do the project within the boundaries of the law, economic situation, and more. Then the last one is called the lean. Anytime you hear about lean is about what? Ensuring that what? You finish the project on time. At the same time, you minimize wastes. You minimize wastes. So that focus on maximizing value. Focus on maximizing value while minimizing waste. So you ensure that what? You focus on maximizing value and minimizing waste. And waste here means what? You don't waste time, you don't waste resource and cost. Means you don't waste money, you don't waste resources and also time. Although money is a resource, but in this case we're classifying it. Now, derived from lean manufacturing principles, it promotes efficiency and what? Continuous improvement. So in this case, if you're using lean project management, you ensure that what? You don't waste time, you don't waste resources like human resource, don't do cost. You ensure that what? You do the project within the budget. The next question here is asking number 3. Number B, not number 3, basically number B. Somebody who has a question. I've seen some. The question was asking about 5 approaches, but there are more. I was just able to answer the question, but there are more. I can share more. You can just inbox me, then I can make notes and share more in case you need more of these approaches, I can be able to share them. So Ndieki, you can inbox me later, then I can share more. And when I'm sharing, I don't share with Ndieki only, I'll share with everybody in class. So I'll put in the group. Yeah, so if I forget, please remind me so that I can be able to what? Share them. I'll share them with everybody. Now, let's proceed. Question 2B. Let me highlight. Question 2B. Discuss the process of developing marketing information for a new product. Now, you see, there's something I want to tell you. There's something I want to tell you people as when you're doing exams. Anytime you see a question on the process must be the process must follow. Steve, umeingia na 2 gadgets. Can see Steve twice, Maybe you are umeingia na laptop na simu pia, but there's no problem. Haina shida. Now, anytime you ask a question about a process, you must be very careful. If you're not sure about the question in the process, if there's a multiple choice question, there's an optional question. If you're sure, do it. If you're not sure, don't do it. Because process must be a process. If you're supposed to follow A, B, C, D, and then you go A, C, you'll be given a good mark for A, then they stop. Anything that follows will be wrong because you're following what? A wrong process. So anything you see a procedure. If you're not, sometimes it's the only question you can do. Maybe B part is okay, you can do. But basically, I'm saying that if there's another option that you understand better. That's why sometimes in exams, sometimes there's even a problem whereby some of us don't read. Anytime you're given an examination paper, go through it from question number 1 to last. There are people who have struggled with question number 2, and then they find that what? Question number 5 was very easy. And then you realize when you do that 5 minutes time, then you will question number 5A and B was very easy. So try to read all the questions and start with what? The ones that are easier for you. So there's something called tactics of passing exam. Sometimes it's not about all you know, it's about the tactics. Somebody utamwambia, did you see question number 5? It was very easy. I did not see because I just finished 1, 2, and 3. So look, if there are what's called optional questions, if they answer all questions, there's no option. But if there's an option, basically, choose the option that is good for you or that you can answer. So these questions on the process, sometimes they are very challenging. So procedure, process, steps, those questions, if you're not sure, avoid them. But we have learned them. So you're not supposed to be not sure. You're supposed to be sure. So there's no cause for alarm. Now, discuss the process of developing marketing information for a new product. Number 1 is what? The first thing is identify the information needs. Because we are marketing a product. So the first thing is what? Which information are needed this product? So determine what kind of data is needed, e.g., customer preferences, competitor analysis, pricing trends, to make informed decisions about the new products. Identify information. You cannot start producing a new product or developing a new product if you don't find information. So first know, for example, customer, what are the customer preferences? Then what are the competitor analysis? What are they producing? So that's what you produce a superior product. Number 2 is developing internal database. Database is basically where you store information. It's called a database. So collect information and store them. So collect data from within the organization, including past sales records, customer complaints, service reports, and website analysis to understand customer behavior. So also, you identify customer need, then what? You develop internal database. Information that is within the company that can help you. For example, talk about past sales record. How has the sales been doing? 1. Number 2, talk about customer complaints. Which are the areas that customers are complaining about? Customer complaints. Talk about service reports and so on. Then number 3 is marketing intelligence collection. So gather everyday information from the external environment, such as competitors' activities, industry trends, and market development through trade publications, online forums, and social media. When you hear about marketing intelligence, this word, a continuous collection of data about a product, a good, a service, or the company. And this one is done on a continuous basis. Research is done periodically. You can do research every 6 months or 1 year. But marketing intelligence, you collect information on a daily basis to know how you're doing. You're able to understand, with the intelligence, you're able to understand what? Competitor, you can know what your competitor is doing. Are they decreasing price? Are they improving quality? You can know so that you also adjust. Service report, you can also know what? Industry trends. What is happening in the industry? Where is the customer what's the customer needs are going? So basically, from those information, you're able to what? Make a very good decision. Very important. Understand that concept. Very good. Then number 4 is what? Market research design. So we go to what we call market research design. So what does that mean? Say that what? So talk about plan and execute formal research activities like what? Surveys, interviews, focus groups, targeting potential customer to obtain primary data on their needs and expectations. So now we go to research. Now research, basically, I can collect data. If I'm, research, data collection is a very important aspect of research. So for me to be able to collect the right data, basically, I can collect data. These are called data collection techniques. I can do survey, I can do interview, I can do focus groups, I can even give you questionnaires to understand the primary. I get the what's called the first-hand information. Primary data is data collected from the respondents. Then secondary data is basically data in records. For example, if I look at the sales record for last year, that is called secondary data. Means what? I'm looking at the already record data. But if I'm collecting data, asking you a question, that is called first-hand information, or what? What's called the primary data. Then number 5 is data collection. So use qualitative, e.g. open-ended interviews, or quantitative, e.g. structured questionnaires method to gather relevant information from what? Target market. So there's something called qualitative. If I ask about your opinion, you're giving us what? A qualitative response. I can ask you, for example, what do you think about the Kenyan economy? Then I give you open. You write for me whether it's good or bad. You write like 5 paragraphs. That is called qualitative, is your opinion. But now I can also ask what? I can also ask what? Quantitative, what's called a structured questionnaire. For example, I can ask you, I can give you options. I ask you, for example, select your view of the Kenyan economy. Then I give you first form. Very bad, not sure, very good, good. So basically, in this case, you don't give your opinion. You tick for me. So when you tick for me, at the end of when I give all of you, like right now we are 6 in this class. If I give 5 of you questionnaires, then I can say that what? 2 of them said the economy was very bad. 1 was not sure. Another one said the economy was good. So see now, I'm having values. I can now say 2 over 5 or 3 over 5 said that what? The economy was bad. Now that's statistics, 2 over 5. But now when you write on a piece of paper, that's opinion. It's very difficult for me to know or to explain whether that opinion is very bad, very good, you're not sure. So that's called data collection. So you can collect qualitative data or quantitative data based on what? On the data. Then after collecting data, you go to data analysis. You collect data, then you analyze that data. After collecting data, you're supposed to what? Analyze the data. You collect data and then you analyze. So what do you mean here? So that use statistical tools and software to analyze the data, collected data, to identify patterns, preference, and potential demand for products. So basically, you can use various software. Like the most common one for us who are doing social sciences is called the SPSS. It's called Statistical Package for Social Scientists. So we can use the SPSS to collect data, or you can use Strata or even the Excel. Those one can use to analyze that. Then so you can use the one you prefer. Then reporting and dissemination of findings. So once you analyze data, you interpret, then basically you give us a report, you give the company report. So present the findings in a clear actionable manner to the product development and marketing teams through reports, dashboards, or present. So basically we'll come and present to the company that this is what we found out about people saying about the product, what they want. So from that report, you can now what? Make a decision. Then number 8 is what? Decision making. So use this insights gain to make critical decisions on product features, pricing, packaging, and promotion. So basically, from that information that you collected, you're able to what? Make decision in terms of what? Number 1, terms of when we talk about aspect of what product feature. So because I collected information, what the customer wants the product to look like. So in terms of feature, so I can collect that information, then I can come with the data and tell the customer from our research, customers want this product to have A, B, C, D as features. Now, pricing from our data collection, customer preferred a price of this range from 50 to 60 shillings. Now, packaging from our data, from our research, customers prefer this item will package in this particular manner. And even promotion, customers prefer, we ask customer where they get information about product. Customer prefer social media. So if you're going to market this product, let's concentrate on the social media. That's the should be. Then number 9 is what? Feedback mechanism. So after launch, gather post-launch customer feedback. So if you launch a product, there's something called what? Post-launch. What is customer saying about the product? After launching a product, then you must know what is the customer view of the product. So post-launch customer feedback and monitor performance to refine the marketing approach. So basically, you can, if you watch the feedback, then you can know what the problem is and then what? Adjust. So that's what you're able to. And then number 10 is what? Ongoing monitoring. So you need to monitor. You need to monitor the sales. So continue updates and refine the marketing information system to respond to what? Changes in the marketing environment. So this marketing system should be updated so that you're able to what? Collect information with the market and then adjust accordingly. So that's why this question, if I were doing this paper, I would avoid it. But if you understand it, well and good. But there's some what's called tricks of doing exams. There's some questions that if you're not sure, the procedure. If we do them in class, you need to master them. If you master them, well and good. But if you don't master them, then basically try as much as possible to ensure that what you get. If it is an option, do it. But if there's no option, we'll do it and pass. Final to repeat a battle. Now, the next question here is question 3. Somebody has a question. I see somebody has written something. Let me ask. A procedure is a procedure, although sometimes you have what's called a condensed procedure. Condensed means there are some books that combine the stages, some books separate them. But ensure that what? We go for the long one. You know, this is a professional paper. A professional paper is normally very punitive. That's why I expect you to pass this paper. In CASNEB, I had somebody say that, oh, I did an exam and then the paper was not marked well. I want to apply for a marking. I can assure you, never ever apply for a marking in CASNEB. You will never pass. Let's do it the normal paper and pass, other than going for a marking. Your money will go. Some part of your money will go and you will not pass. Because in remarking, we mark using the marking scheme. Remarking is punitive. Normal marking is very fair. Remarking naambiwa vile iko hii marking scheme ndio mark. Kama kuna kitu iko hapa wachana nayo. Lakini during the normal marking, we have the leeway to look for any other relevant mark paper. We mark per answer. Yes, we mark. There's nothing you write that will not either have marks or distract marks. So basically what you write. We'll talk about those ones. The examples are coming, we also talk about the terms of wording of marks. You understand those concepts, basically. We talk about those things. Like today I've told you about what? Question selection. I told you about read the paper. When you get the paper, read from number 1 to number last first, then make a decision. So we'll discuss those things as time goes by. Every time we're revising, we get a hint of how to do that. Now, next question here is question 3. With regard to organizational structure, explain 5 objectives of departmentalization. Now, departmentalization means what? Dividing the company into sections or departments. Why is it important? Or why is departmentalization good? Why do we ensure that we have departments in the company? That's basically what the question asks. Importance of a department. Now, number 1 is what? Specialization. So that grouping activities by expertise, e.g. marketing, finance, help develop specialized skills and improve efficiency and quality of work. That's very true. After dividing functions into departments, so if you have done marketing, you go to marketing. If you've done accounting, accounting. So basically, people go and work in areas where they can use their expertise. Number two is clarity of responsibility. You know that if I'm in accounting department, these are our responsibility. I don't start doing marketing responsibilities. I don't start doing HR responsibilities, but basically there are some which overlap, but basically, sure. Number two is what? Improve coordination. So department organize resources and tasks logically, improving coordination among the functions or regions. Basically, if you're able to departmentalize, then basically you can know which departments depend on one another, and then you can ensure that what they collaborate well, or they work well to ensure that what the company, or they ensure that what everybody runs. We have marketing, production, accounting and finance, procurement. All of them depend on one another. So basically, ensure that. Then number four is efficient use of resources. You know, this point of efficient use of resources, it applies to so many things. If you look at most of the answers you've done up there, this efficient use of resources one is a common factor most of everything. So by organizing similar tasks under one department, resources such as personnel, equipment, and funds are used more efficiently. So help us to what? To use resources more efficiently. Then number five, facilitate performance appraisal. Basically, you know that those who are in the marketing department, if you are in the marketing department, will know that these are your duties. Then if we are coming to evaluate you, we evaluate you based on the duties done at that department. If you're in the HR department, we know your job description. So we'll evaluate you based on the duties performed in that department. I cannot evaluate you as an HR department with a function of the accounting department. You must ensure that what? We evaluate you based on your job description. Very, very important. Look at that. Now, another guru here, Elton Mayo. This is a theory, basically. Say that Elton Mayo, somebody has a question. Somebody has written something. Yes, that's another objective, another importance, increase in production or work. When you're doing what you went to school to do, when you're doing what you experience in, it is, so department means what? You're put where you can use your intellectual acumen, you can use your skills. When you're put where you can apply your skills and your academic qualification and your experience, you are able to be more productive than being put in an area where what? You cannot apply your knowledge. So that is a very good point, Steve. That point is very, very expectant. Now, the next question here says that Elton Mayo and his team found a way to improve productivity by creating a healthy team spirit environment between workers and the supervisors, labeling it what? Hawthorne's effect. In view of the above statement, describe 5 features of what? Hawthorne experience. So this guy did an experiment and found that what? For employees to work well, there must be good relations between the employees and the management. That's what this guy was trying to do. Now let's look at some of what? Some of the features of Hawthorne's experiment. This was done in the US, basically. Hawthorne's study was done in the US. That's when they did the Hawthorne study. Now let's look at some of the, let's look at basically some of the features. Number one is what? Human relations. So Hawthorne's effects depends so much on what's called human relations. It tries to look at that for us to work well, there must be good relations between management and the organization. That's what this Hawthorne's effects talks about. There must be what? A good relationship between what? Between management. So the experiment shifted the focus from mechanical aspect of work to psychological and social aspect, emphasizing that the importance of what? Worker morale relationship. They show that what? Treat people well. When you treat employees well, they'll definitely what? They'll definitely give you more. Number two is improve importance of informal groups. This guy said that if you have employees, ensure that they interact at their level, what's called informal groups. Informal group are things like what? These are basically natural, we call them, these are basically natural formations. Like for example, even at your workplace, there are people that are just your friends. You didn't choose them, but you just find that word. You find every time, even during break, you find you are just close to them. Those are called social. So you say that word, for people to work well, those social formations should be encouraged because they're able to what? They're able to help in what? In fulfilling their social need. There are people that come from their houses when they have issues and interact with their friends and they laugh basically, they become very productive. So ensure that what? Those social groupings are also enough. So Mayo discovered that informal work groups is going to affect worker productivity and behavior often more than formal rules. Say that what? Some of these informal informal interactions sometimes makes customers or make employees be more productive than even what? The formal groupings that we have. Then number 3, attention increases productivity. So workers improve performance simply because they were being observed and felt valued, highlighting the motivation. So basically what they're saying is that what? Workers also need to what? To be motivated. When you give a worker attention, attention in this case means what? If somebody has done something good, you appreciate. That's the attention we're talking about here. If Sheila has done something good as in the company, I should be able to what? Appreciate. And appreciation does not mean now maybe we given by just saying that you've done a good. That's what. No. You see, when you are a manager who is close to your employees, you are able to know even their emotional status because you know them. If you're a manager and you have a personal connection with your employees, basically, when they have an issue, they can tell you without a problem. So, and sometimes if you have been treating your employees well, employees don't want to disappoint you. They go an extra mile to ensure that what? Huyu manager ni mzuri sana, tukimfanyia makosa we feel bad. But there's some managers, some employees say, me no. And then last one, employee participation. Basically, ensure that what? Engage employees. Let employees participate what? In the engage employees. Let employees participate what? In the making decisions of the company. So employees feel good when they feel like what? Their opinion also matter. When there's an issue to be discussed, they are also asked, what do you think about this thing? So basically, employees also feel good when they're part of what? Part of management. So I want to stop there for today. Thank you for coming. Let's meet again on Saturday so that we can proceed. So with those few remarks, I want to wish you a good night. Let's meet again on Saturday, proceed with our revision. Mark where we are so that when you come on Saturday, we know. So Mark, we are in this, we are in which paper? We are in August 2023, question number, we're supposed to go to question number 4. So mark that one somewhere so that when we come, we know where we are. So with those 3 marks, have a blessed day, blessed night. Thank you.